Hello, everybody. Welcome back to another stream, a market close stream, a stream that is one of the more special market close streams that we've done because we only get to do this one 4 times a year. Ladies and gentlemen, Palantir Q2 2024 earnings. We are here and it's time to break everything down. In the next 30 minutes, we're going to do a preview of what we've got going on in the context of Palantir. Obviously, things have changed dramatically in the past 2 weeks in the broader market, and so we're going to be analyzing that. And then at 4 p.m. or about 4:05, we will get the numbers and we will get to see what happens in the context of Palantir. So real quick, before we bring up the guests who are going to be with us throughout the entire stream, and we're going to keep going from there, I just want to say, and I want to take the opportunity, I do this every single stream before we get into it, and I'm probably going to do this for the rest of the time that I'm covering Palantir before we do a stream. This is a really important event, not only just because of the stock and the fact that people are invested, and we're going to see what happens, in the context of the stock movement. But it's because this is a real community. I think if anything has shown over the past 5 months in terms of leadership from Palantir, embracing the retail community, inviting people to events, Carp taking pictures with people, the new Palantir merch store starting, and people like Iliano and Chad becoming real figures in the community. I think Palantir has acknowledged that they have something very special outside of their technology and their culture, which is a retail investing base that has been excited about them for a long time, that at $6 when the institutions decided not to buy, retail decided to buy. And we know Carp appreciates that deeply. So these events are very important for the broader community. It's very exciting for the broader community. Whatever happens to the stock, and we'll have plenty to say and analyze about that. But until we get to the stock movement, it's just important to remember that these are really, really important moments in the broader journey. I think one day Palantir is going to be a very, very big company. And we're going to look back on these moments knowing that we all spent this time together analyzing when it was a much tinier company than it is in the future. Having said that, as chat says, where's the tight white shirt? This is the best I could do. I didn't have a full tight white shirt to match Carp's energy, so I put one with flowers. The people that have been calling me gay, that's definitely not helping my case. But nonetheless, we are here, we are live, and it's time for Palantir Q2 2024 mother effing earnings. Here we go. I got Arnie. I got Amir. I got Neil. What's up, boys?
Oh, Neil. Hey.
Oh, my twin.
I got all the Europeans. I'm outnumbered 3-1, so I can't.
One white, one black.
Yep.
Hey,
right.
Arnie, Amit, let's see the new haircut. You hyped it up on Twitter.
I just got a haircut. Yeah. Well, not the top. It's just the. It actually looks not that bad, dude. Hold on. It looks kind of okay here.
Sexy. Is that the word?
Here we go. Yeah, I got a haircut. I had to get a haircut today. My hair in the morning. But this is actually. I'm going to leave it like this. It doesn't look too crazy. All right. So we'll probably have some more people joining, but we got 20 minutes or 27 minutes until earnings. Let's start with you, Neil. What are your thoughts going into earnings in 20 minutes?
Well, disregarding everything that has happened today, which was quite a crazy day, good day for shopping. No, good sentiment. I think most of us are expecting accelerated growth, customer, commercial, and government. So I'm expecting another acceleration in both of those segments. That's about it. More comments about more clients asking about Palantir, etc., etc. So we're pretty confident. Whatever the stock will do, I don't know. It did touch on the 200-day moving average today, rebounded quite nicely. So I guess that's good.
Yeah, so we had the stock. It's at 24 right now. It was at $20.69 today. Obviously, the entire macro landscape has changed. Arnie, your thoughts going into earnings, and if you could also talk about the macro a little bit in terms of
the disaster.
Yeah, the disaster this morning that we had.
Well, let's start from the disaster. Actually, what happened? I would argue nothing specific to Palantir. There was a major sell-off regarding everything that could be considered a risky asset, and the guilty about this sell-off seems to be a stupid carry trade that got a huge margin call that made the VIX, so the volatility index, spike to levels we previously attached to the great financial crisis, 2020 during COVID. So what we have been seeing this morning with Palantir opening at minus 15% after major drops of the previous day was a one-off event like in terms of magnitude of the event. And that was not specific to Palantir, which is, I would argue, a good thing, because when typically these things happen, you see a forced liquidation. And first, people just panic sell. Some are forced sellers, maybe because of their margins. And then people started rationalizing, okay, let's actually buy the things that we actually want. And Palantir, since it recovered from minus 15 to minus 2, is very close to being flat now. It's like, okay, people actively want to buy Palantir. And why they want to buy Palantir? Well, there are the earnings, but these earnings are in particular important because the narrative of AI has been around for more than 1 year now. A lot of promises, and now it's time to deliver. And we bet as investors that Palantir is not only a company that delivers, but is the company that delivers in AI. So we have this major opportunity for management to show with financial numbers, which I personally expect to be very strong, but to really control the narrative. If there is one company that can really shape the story of how AI is told to deliver value, it is Palantir. So as an investor, I'm heavily betting on Palantir to deliver.
Amir, your thoughts going into earnings?
Yeah, I think it's as we talked about on the weekly, and I released a YouTube video earlier today. I think beating Wall Street expectations today will be fairly easy. I think the headline numbers in terms of growth rates will also look amazing. So let's see how the market reacts to that, because the comp period is so weak. And I always harp on this fact that Palantir only invites like Mariana and now Dan Ives as analysts, but we do know that the Citi analyst Tyler Radke was over at the Palantir HQ, so that could signal that we have another analyst joining the call. But yeah, I'm very excited. I guess we'll get into details later on.
Well, let me ask you, what could this analyst have heard, understood that make him switch opinion very abruptly? Let's remember, this guy from Citi, Tyler, is the one that before the earnings call that defined the first gap earning, say a rate like confirmed a sell rating at $5 per share, and now he also raised up to 28. So, what do you think he understood?
He understood that his boss contacted him and said, "Hey, Tyler, why are we missing out on Palantir here? What are you doing?" He's like,
No,
"Okay."
his boss was like, "Hey, Tyler, you want to keep your fucking job?
No, but you
Go
know,
meet them.
But it's insane because we spoke about this on the weekly. But even like his price target upgrade is like, well, I don't think Palantir is worth 28, but here at 28 price target, you're like, what are you talking about, dude? You don't understand it at all. I really want to see the equity report. Usually when they initiate coverage, there's like a lot of details about the company, what they're seeing. But then when they update just the price targets, you usually get 1-2 pages of their updated thoughts. I haven't seen that, so I don't know actually what he's seeing. He made a short comment about, yeah, AIP bootcamp seems to be going well, but they have been going well even before his upgrade. So I don't know what he's seeing. I just think there's a pressure, like peer pressure to join in on the hype, and he doesn't seem convinced yet. But I hope now after his visit that we will get at least one more analyst joining the call. My dream would be that all accredited analysts can join, but yeah, that's a
16 of them.
Yeah, why not?
Yeah.
Okay, so real quick, guys, if you're curious at all how to support the stream, the only thing we ask, no money at all. Everyone's Twitter is in the description. So if you want to support the stream at all, no money, no super chats, don't do any of that. But if you want to just follow everyone on Twitter, it's a great follow. You'll get tons of stock market content, macro content, and obviously Palantir content as well. All of that is in the description. Matt Money, you actually use Palantir at your job. What are you expecting going into earnings in 20 minutes?
Well, I'd like to congratulate everybody that was able to pick up shares rather cheap this morning. You never know what's going to happen with the market in general, but when the market gives you an opportunity to buy at 21 or 22, I think many people were taking advantage of that this morning. So congratulations to the folks that did. I unfortunately didn't have enough capital on the side to do that, but sometimes you have to recognize the market will give you gifts, and who knows after this earnings report, or who knows with the macroeconomic environment. The VIX is already coming back down quite significantly throughout the rest of the day, and this kind of flatlined in the 30s. So tomorrow maybe go back and it was just a dead count bounce, and the market could give us a cheaper valuation for Palantir to pick up, but always good when you have the opportunity to see it and pick it up. I think that Palantir will continue to demonstrate its value with respect to continued growth. I think U.S. commercial has been an outstanding point within the past few quarters, and I hope that continues. I expect 80% year-over-year U.S. commercial customer count growth. So I think that was like an 18% or so sequential from last quarter, which was already a strong year-over-year. If I remember correctly, it was like 60 or 67%, if I remember, from the first quarter of 23. So I'm really expecting that kind of sequential quarter-over-quarter growth to level off for U.S. commercial as boot camps really take hold. But with respect to the rest of the market, I think it always just comes back to what people's time horizons and objectives are. Always lean back on that. I know cool heads always prevail in this sort of situation. You have a strategy for a reason, or if you don't have a strategy, get one. And it'll allow you to at least navigate through some of the emotions that when you see things down 10, 15% in a given day, you at least have an action plan to follow back on. And it's always a nice time to, in a week's time or so when things do calm down, to do some retrospective analysis on what you did during times like this. And recognize what you can do better for the future. I know my first time in 2018 when the market declined about 20-25% in a matter of a month during the Christmas time in 2018, I completely lost my head. But when it came to the pandemic in 2020, it just reminded me to eat ramen and peanut butter jelly sandwiches, add as much money to the market as I could. And it really rang true as it came into full swing up until 2022. So anyway, really looking forward to the conversation. Glad I was able to run home really quick from the office, and glad to be here with the other four.
Okay. Let's talk about top line revenue growth. Arnie, Street wants 652. Amir thinks 670-ish is not crazy. That would be 26%-ish year-over-year growth. What do you think they come in with top line revenue?
I am quite aligned to Amir. Now, I know that could piss off someone, but I don't really care if it is like 22 or 23. Like, what I really care is showing strength. Let's say if the revenue growth is okay, so just 1 to 2% of the guidance, but we get a lot of customers. We got the intuition that the customers acquired are signing very big deals. That to me is a more powerful signal. Let's remember, if we acquire many customers in this phase, we create essentially the basket for future growth in the next 2-3 years as these clients expand. So for instance, I like to share the deal count every quarter, and just to give a little bit of sense of what we achieved this quarter. We got the Maven project, so the most important contract for AI in the government space. Tampa General Hospital, $50 million for 7 years. Another contract with the CDAO, so still Army related. 31 contract, $30 million contract with the Air Force, $19 million with ARPA-H, $12 million with Department of Energy, $5 million from the Federal Aviation Administration, and then we have a very nice commercial partnership like Oracle, Hyundai, Eaton, Ringier. So a lot of stuff going on that kept going a bit also in Q3. We're just at the beginning. So the backlog of contracts that could be distilled over the next quarters is coming stronger and stronger. And I believe giving signal, like the management giving signal that we are just getting started, we are increasing the speed of which we are signing new contracts, we are monetizing faster. That is more important for the street overall rather than a 2% difference in the revenue.
Okay. Neil, your thoughts on revenue growth? Do you think we beat 650?
Yeah, I think we beat. By how much, I don't know, but I think we beat. I think we might even get another raise in guidance for the full year. Right now, it's still below what the analysts are expecting, by the way. I think it's 2.7 billion. We're still a little bit below that. So I would definitely expect a guidance. And guidance, as always, is a bit more important for the street. Right? Even if it's a small beat, but then suddenly guidance is raised, then everybody's suddenly very, very happy. So yeah, that's the expectations right now. Plus maybe a bump in RPO, long term, short term as well. But we'll see. I guess we'll see in 20 minutes or so.
Amir, you think they're going to have a big beat. Why are you so confident?
No, I don't know about big beat. I just think that the expectations are too low, and I think that the comp period is so poor that the growth rates will look impressive. But as Arnie mentioned, it's not really about how much revenue. I'm looking like most of Palantir's value for people that like to value the business. Like it doesn't really matter what they do this year or next year. Like most of the value is terminal. So I want to see like breakout major industries per revenue. Like why don't we get some more insights into like why not break out the different platforms? For example, we know that people talk about Palantir is the greatest healthcare startup. They power X amount of beds. Well, what's the revenue looking like in the healthcare sector? Like the major industries should be broken out. I want some sort of trackable metric for boot camps, AIP. Like the only thing we get now is some ballpark number of the total amount of boot camps, but we don't know conversion rates. We don't know attendees. We don't know like anything. So what I want from this earnings is more insights that I can use to value the business more accurately. So that's what I'd be focusing on. Like if they beat revenue by 10 or 20 million, it's not too important. But what I do believe is that the growth rates will look impressive simply because the comparison period are so weak. Like US commercial revenue, for example, it declined a year ago compared to the previous quarter. So like it's set up to have really impressive growth rates. I believe they'll show something like 60% US commercial revenue growth, something like 25-26% top line revenue, like stuff like that. I think will look impressive, will catch some headlines on CNBC, will bring attention to the stock. But what I care about is getting more insight into the company.
Guys, I would underscore one thing that Emir mentioned, that the guidance seems so low, but is even easy to beat. And as Neil underscored, it's like there is a lot of space for future update on the guidance. But why? Because if we go back at the last quarter, the guidance for the year was at 2.680 billion. If we look at the year-on-year growth of that guidance is like 20%. So which is lower than the last earnings growth, which is lower than the guidance we are currently expecting for this quarter. So this guidance implicitly tells us we expect to decrease growth. How reasonable is that? I think that's fake in the way that I believe this is the numbers that they will update.
And the analysts aren't really catching on to that either, which is like insane to me.
I mean, as a context, analysts still expect the same revenue growth they were expecting more than 1 year ago, almost 2 years ago when I was starting writing the first articles on bullets. They were expecting revenue growth up to 2025-26 to be stuck at 20%. Where they change the numbers is only on the margin side, but they're still stuck, Palantir, to keep growing at 20%. Now, if Palantir can show some evidence that that growth rate will be way higher than that 20%, we could have some nice surprises.
So let's, Nick, thank you for the $5 super chat. Is Palantir going to get crushed if they simply meet what if they miss? I think this is a good super chat to dive into a bear case. Obviously, we're all optimistic. Macro landscape has changed, but generally, we all think they're going to have a good earnings. What would they have to report numbers-wise that you could see the street tanking it 20 to 30%, and you would kind of understand, even if you would want to buy that dip, you would understand, okay, I get why it dipped. Amir, any numbers that you think would be really bad if they reported?
I think it's more rooted in percentages because we are in upwards trends, like we are accelerating growth across various metrics. If we simply like stagnate that, I think the stock could be punished for that.
Neil, your thoughts?
Yeah, no, exactly that. Because remember, before this was the bear case when we had a slowdown, when the stock did get hit, and even when you saw a little reacceleration, the bear case for most analysts were still government isn't growing, this isn't accelerating fast enough. So if this quarter again we get hit, let's get hit, we get numbers that are under the expectations that are decelerating, I think that could trigger a huge sell-off. Do I expect that to happen? No.
Arnie, your thoughts?
Well, with SaaS companies, at the end of the day, it's always a matter of mixing sales growth and free cash flow margin. And we know that in the latest quarter, Palantir proudly showed the rule of 40, coming to almost 60%, which is literally top ranked in SaaS. And in an environment, as we underscore many times at Palantir Weekly, where the SaaS companies are both declining in terms of revenue growth, so they're decelerating. They had an expansion last year when they started cutting costs, but now also these margins are hard to sustain. So if Palantir shows an abrupt drop here in these metrics, so or the composition of revenue growth or very bad margins in the way that, okay, you spent a lot in marketing, you didn't deliver any new contracts, that could be something that could piss analysts a lot, because now the narrative is Palantir is an emerging leader in AI, and what could disrupt this narrative is what could make the market crazy.
Matt, your thoughts on what would cause the stock to take a nasty dip?
I think lower than 100% revenue replacement for their existing clients. So we continue to see that number go off and down and to the right. And I think at some points it's even hit like 108, 109% year over year. I'd like to continue to see that merge into the mid teens again, 110, 120% like it used to be. I think if we dip below 20% year over year growth, I think as Amir put eloquently earlier, it's a pretty easy quarter to build on from last year 2Q. There was very little sequential growth. I think it was single digit sequential growth quarter over quarter, and I think it was only like 14% or 16%, maybe even less year over year growth. So building on top of that, I hope that it's easy to get closer to the mid 20s in terms of growth, but I think that'll probably be what's expected of the stock. I know I'm personally expecting closer to 24% year over year, but if we go below 20%, that will be pretty abysmal, and I think we'll see the low 20s again in the stock price.
Okay, we got about 7 minutes. I want to share a quick 2-minute clip from Alex Karp, the CEO of Palantir, talking about LLMs and AIP. And then I want to get some thoughts on what you think he might say again on this topic on the earnings call.
And why have they not understood that you should build something that would allow you to work with this interpretive, generative thing called a large language model, but in a way where you can actually impose the knowledge from it, the logic of your business, the understanding of your business inside the architecture of a modern enterprise. Every modern enterprise in the world has an architecture, security architecture, a way in which you see the world, insights that allow you to manage your business, insights that you've acquired that are crucial to the way you build and win and conduct things, insights that your engineers have, insights that people in your business need to maintain even when people leave, insights that you need to get people to understand, so non-engineers understanding engineering processes. Why have people why are there so few products? It's like you have the chips, they create the LLM, and then de facto you need something like an ontology. And why did we build it? Because we had a realistic understanding of the intersection between insights, a raw resource that needed to be used as a raw resource, large language models, and the complicated architecture of your business, both from a security and from an insights, the way in which you join the data, the way in which the data is actually siloed, the way in which you control who sees what, who does what, under what circumstances, that is the precursor for any enterprise, any society working. And at the end of the day, it's that product that has powered us from no clients to 70 people here presenting and hundreds of people interested, and is going to power both this company and, quite frankly, those that adopt, especially in America, into a superior position.
So that type of analysis is what the street cares about when it comes to giving them the AI premium. Obviously, they're looking for monetization now from AIP. I think we got 4 minutes till the numbers. So Arnie, your thoughts on how you think Karp is going to frame the AI discussion on earnings today?
I think Karp has a massive opportunity right now to create a great marketing campaign for Palantir. Why? Because now everybody sees a huge spending in terms of AI, CapEx, chips, whatever. Everybody wants to deploy AI in some way, but we know that Palantir is the only company that is really able to deliver AI benefits at scale. And the key of everything is this concept of ontology. De facto, you need an ontology is probably the most powerful sentence in BI world. But I would argue very, very few people, companies still get it. And now that the skepticism is rising towards, okay, who is actually delivering value, I think Karp has a massive opportunity to push and explain this concept way better. I think he will reiterate a lot this concept of ontology and chips, because that is essentially the secret Palantir has built over the years, and now it really wants to leverage on. Peter Thiel says, great companies are built on secrets, and I think this is exactly what Palantir understood. Now they're trying to leverage it also internally, and I would be happy if they underscore, look, what we have been achieving also in terms of margins, we are growing more while expanding margins, is also due to the AI agents we deploy internally.
We got about 2 minutes till earnings. Real quick, Amir, your thoughts on how Karp should frame the AI discussion?
Yeah, I think a lot of eyes will be on Karp, especially now with the Microsoft mention. I think hyperscalers will start to push Palantir, which really puts the pressure on not to mess up. Like, he can be unhinged at times. But as Arnie mentioned, the ontology, mapping your business, various integrations, data sets, making them able to communicate to derive outcomes, like that's, we already know about that. What I haven't heard mentioned a lot is the whole KLLM discussion, which is really powerful in essence, because miners are being valued way higher than Palantir, who is the picks and shovels. Like OpenAI in this example, what's the latest valuation? Like 90, 100 billion. Yeah. Like they need to tell people like where the actual value lies in this space. So looking forward to that.
All right, here we go. If you're new to this channel, we do a market close every single day. At the market close, we ring the bell. So fair warning, in the next 50 seconds, you are going to hear a cowbell. You might be thinking, what type of stream have you stumbled upon on YouTube today? But that's what we do. And then we got the numbers. I'm nervous. I'm excited. We'll see what happens. Stock implied volatility is 14% up or down. So we are going to see in about 30 seconds if there's any dramatic moves. I'm not sure. I think the numbers might come out at 4:05. So maybe we're going to be just waiting for 5 minutes, but we will find out pretty soon.
F5.
Yeah, we will find out pretty soon how this plays out. Are you guys nervous?
It is what it is.
It is what it is. I mean, we're all long, so it's not, it is what it is, but still, it's like, you get up for these days. All right, Monday, August 5th, 4 p.m., Palantir Q2 earnings. Thank you, everybody, for being here. The stock market is now closed. All right, and now we wait.
That bell ring gets louder every time.
Every time.
And longer.
So when I get the numbers, I will immediately start reading all of them. If anyone gets it before me, please put it in the chat. I'm refreshing constantly, so I should be able to see the numbers hopefully quickly. And I'm going to read them out, and then we'll get commentary from everybody.
Do you
after reading them out.
expect we will have a carp letter?
Oh yeah, we're probably going to get a carp letter as well. We get that
Yeah.
every day. Not every day. I wish every day. Every earning.
No, because last time there was no letter.
No, there was.
There was a letter.
Yeah, there was.
Oh.
There was
Yeah.
Oh
he
my
said-
God, Arnie! I thought you were Carp #1 fan. You
Yeah,
missed
fun.
the letter?
Yeah,
What's
you're not
this?
getting any selfies anymore,
Oh,
my
yeah,
Come
friend.
on, Arnie.
Oh my God!
I was
send
looking
the,
at
send the
Arnaldo.
merch back. Send the merch back.
Okay, so
Demoted.
after
bad.
hours, it's up 0.5%. Again, really hard to judge any moves until we see the numbers. But we should be getting it.
I mean, look, if it drops 14%, we're back to prices not seen since a couple of hours ago. So
Correct. All right, we're
But
up 1% after
website
hours,
rating-
1.2, moving just a little bit. Maybe that's nothing though if the numbers aren't out.
Guys, think this way. We are very close to the price at which Palantir dropped before the last earnings call. And meanwhile, the value has increased a lot thanks to the new deals, further acceleration, and blah, 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 you know.
yeah, but that's not how it works. PayPal is at the same price as the last 10,000
Man,
quarters.
you just had to bring up PayPal, man.
But that's PayPal. This is the PLTR.
Yeah, it's different. It's a different P. No numbers yet. It looks like it's probably 405. No numbers yet. S&P right now at the close 518. It was at 507 on the day, so I mean had a bit of a reversal. IWM at 203. Nvidia was at 92. If anyone picked that one up, now it's at 184. SoFi 655. PayPal 60, 61. Apple 209, 72. Palantir 24.25 after hours. While we're waiting, do you think they bought back any stock today when it fell to 20?
Apparently, the
happy
numbers
with
are out, by the way.
Oh, it's out. All right, so let's wait. Arnie, what were you sharing? You were sharing.
Well,
oh,
I
you did.
was
All
just wanted to sharing very fast that
Okay.
the EBITDA consensus for the analyst is actually decreasing.
right. Interesting.
free
So if
cash
they
flow.
beat on that,
So-
that would
So
help.
this is an easy beat.
All right, no numbers on my side yet. No numbers on my side. No numbers on the website. Stock is not really It's up 0.5% after hours, 0.79%. Again, implied volatility is closer to 15%.
I might be quiet when the numbers drop, just filling out spreadsheets.
How does this implied volatility compares with the previous ones?
Yeah, well, that's
I'm
why
not
it's 14% because you take the average of the previous.
No,
move
but
and-
was it higher, lower?
it's
in the
a little
past
lower.
earnings
Last
call?
quarter was 22%. I think we fell, so it's a little lower.
And we actually dropped to 20%.
Yeah. All right, Palantir up 1% after hours.
Woo!
No numbers yet. We got it. Huge beat. Oh my God, 750 million. What? Holy crap. Guidance
need a
update
source.
of 3.1 billion. Are
But
you
I
kidding
think
me?
I think it's bait.
Where's the source? I don't.
It's a deep value 47 on X. I think it's bait.
Oh, I hope to God that's not. I'm sorry if I read that too quickly.
Like
I hope-
when you see it on your screen yourself, that's when we can start
Oh my
talking about
God.
it.
Wait, so they copy and pasted that from another person on Twitter?
From a tweet. Yeah.
Dude, what the?
I have
why are
this
people
in
like
front of
this,
me.
bro? Why-
8.2 billion in revenue.
Dude, I saw 750. I was like, this is going to the moon, right? Okay, we're up 3% after hours, so we are up. Damn it. I'm sorry, guys. I'm sorry. Sorry about that. I'm fine with the chat trolling me, just not on this. Like, don't troll on this.
Not
Okay,
on
we're up.
earnings day, guys.
All right, we're up. 3.5% after hours, 24.94. We are up. No numbers yet on my side. It should be coming soon. We are up, so the terminal has the numbers. Yeah, someone else posted the same exact thing of the other person. No numbers yet. Wow, so it's moving, but numbers aren't public. Now we're up. Oh my God, we're up 10%. We're up 10%.
It is. Whoa.
Was it not fake? We're up 12%. We're up 12%. Now we're falling a little bit. We're up to, was it not fake? Was 750 million real?
Hello.
Was it actually real? Was it actually real? What are the numbers, dude? What are the? Oh my god, we don't have the numbers. They should be up super quick. So we're up, guys. It's a big move after hours. 26.84, up 7%, up 9%. It's obviously moving up to the positive side, but no numbers yet on my side. Stock's doing well. Oh, here we go. 678 million. All right, here you go. 27% year over year. Not bad. Not bad. Not bad. Not bad. So growth estimates: $678 million in revenue, $25 million beat. We expect 697 million in Q3, outperforming estimates of 681 million. So they beat by 25 million. Kind of what we all expected. A little bit more than what we expected, but 678.
That's more than I think I said 650 to 660 was my range. So
yes,
well above mine.
Stock's up 15%. There you
That's
go.
up 27%
Wow.
year over year.
That's not bad. Stock's
27 is pretty impressive. I'm not gonna lie.
That's pretty close to 30%. I think we're
Dude,
getting that.
27% year over year growth is what we've been asking for a long
They raised
time.
full year guidance as well to 2.74, 2.75 billion.
Can someone do the math on that? What is the full year growth then? If
that was what I was expecting full year to come in at. I might have the number offhand.
It's under the tweet you just showed, Amit. By
under the tweet I just showed
from
I don't
Palantir
have
on X.
Yeah, but what is the growth rate on this? So I see the number, but what is 2.7 billion year over year?
Last year was 2.212, right?
We're up 16%, folks. $28.
That's
Not
24%. 24% year over year.
Good. We were growing 22%, now 24. Deck is not out yet, guys. Deck is not out. Still waiting for the deck.
They're gonna keep raising full year. I'm not worried.
I mean, dude, it's not fucking bad. If you're a Palantir investor, you really can't complain. U.S. commercial revenue grew 70% year over year.
Told you. Easy comps. Told you.
8% quarter over quarter. Our business has never been more profitable. 134 million. I think that's a 400% beat on EPS, if I'm not wrong. And finally, we are raising our full year guidance to 2.75 billion, which is up 63 million. Dude, this is not bad. This is fucking
Did they say what? I don't. I guess it was just that one liner, right? I guess you don't have like income margins.
No, not we'll get it on the deck. I don't have the deck.
Presentation is up. I repeat, presentation is up.
Can you send me the link in the private chat? I don't.
No, just link it in the YouTube chat. What the fuck? Share with them.
They raised the guidance from 20% for the year to 21 or so.
Check
so
the private thing.
Okay, so it's up. Okay, here we go. We got the deck, folks. Now it's time. Let me go through it, and then we will talk. Thank you, everybody, for being here. Stock after hours is up 16%. Even with this crappy macro to perform the way Palantir is performing, absolutely exceptional. Congratulations to Carp and team. Let's get through these numbers. All right.
After hours.
Someone link me this presentation so I can.
It's in the private chat. It's in the private chat. So U.S. commercial revenue 55% year over year, 6% quarter over quarter. U.S. government revenue 24% year over year. That is an acceleration from 12% to 24%. That is exceptional. Revenue 27% year over year, 7% quarter over quarter, 678 million. Closed 27 deals over $10 million. Oh my God. Commercial customer count grew 83% year over year. Oh my goodness. Last quarter, that was 69%. That's up 14%.
Nice.
Adjusted operating margin. Adjusted operating margin is up 1%. It was at 36%, now 37 million. GAAP operating margin 16%. GAAP net income 134 million. Free cash flow 149. GAAP EPS, 500% year over year, 6 cents into this earnings.
Do they say what full year op margin is going to be in the full year guidance?
So I'll get to that and I'll check. Okay, so let me read some of the highlights. In Q2, they signed the Maven deal, $480 million contract. That's big. These are some of the qualitative things they did. All right, financials. So we just talked about these numbers. GAAP net income, 134 million in pure profits. The stock is $28.30. Stock is 17% up after hours. Sixth quarter of GAAP profitability. Not bad. Rule of 40, 64%. Wow. Shit. That's not bad, baby. Commercial revenue growth, 33%. That was 27%, so that's up 6%. U.S. commercial, 55%. They guided for 40, so they beat that by 15%. Government revenue, 23%. That was 12% last quarter. That was 16% last quarter. U.S. government was 12%. So we saw government quite literally reaccelerate. I mean, government went from 16 to 23. 23 is like the typical CAGR of a regular commercial business. They're doing just that in the government alone. This is like not a joke, dude. This is legit growth that we're seeing right here. U.S. government revenue growth 24% year over year. Total revenue 27%. No one can say Palantir is growing at barely 20% anymore. Now it's a question of, can we get to 30%, which all indication looks like we're going to 30% eventually. So 27% year over year for total revenue growth. Total revenue excluding strategic commercial contracts grew 30% year over year and 10% quarter over quarter.
That's the specs.
Okay. We continue to invest aggressively in AIP in the US while driving operating leverage at scale. Adjusted operating income margins up another %. They're now up 12% year over year. That means the business itself is becoming more profitable, not just growing on the top line. Look at that. Commercial customer count, 83% year over year. Overall customer count, 41% year over year. So some of us thought we would come in at 600 customers, a little bit light at 593, but US commercial is what really matters. These are the most profitable customers. And if that's growing 80%, then top line customer count doesn't matter as much as US commercial.
Only thing I'm seeing throughout the whole thing is stock-based compensation reaccelerated. But other than that, I'm pretty happy.
96 deals of 1 million, 33 were 5 million, 27 were 10 million, 4 billion in cash. We expected that. They had 3.9 last quarter. Revenue growth of 700. Wow. I mean, they always beat on the top line of this. So they're probably going to get to 700 million next quarter. It's not going to be long before Palantir starts putting up $900 billion a quarter, which is amazing. Revenue of between 2.74 to 2.75 billion. US commercial revenue, 672 million. Wow. They raised guidance on that too. Before that was 45%. Now they're saying it's going to be 47%. And then free cash flow, at least 47%, right? And free cash flow of $1 billion. All right, let's go around the panel. Vince just joined as well. Vince, thank you for being here. Let's start with Amir. Raw thoughts on these numbers.
Go to someone else. I'm busy filling out sheet.
Matt, raw thoughts on these numbers.
Like I said, I'm pretty excited. It met my U.S. customer commercial growth. I was expecting between 80 to 90%, so I was pretty excited with that one. It outpaced my year-over-year quarterly growth. I thought. I think I was forecasting 24 to 26%. I think, and it came in at 27. So that's absolutely phenomenal. I was right on the. Or at least we have 2 more quarters to go, but I was expecting 2.75 billion for the year-end revenue. So excited to see that come up. I thought it was a little light in the 2.65, I think it was before. So excited to see that be raised by about 100 million. And I think it'll continue to go up. I still think that they're potentially being a little light on some of the other forecasts I have for 3Q and 4Q. So we'll see with that. I think the only thing I'm a little bit confused about, which I want to dive into the numbers personally, is the cash on hand. I thought it was going to be 4.1 and it's 4. That's not a big deal. I'm just kind of confused why I thought it was going to be 4.1. And then trying to think what else. Margins continue to be extremely great, over 30%. You can't complain with that, and that's going to grow closer to 40 to 50% when this thing fully gets ramped up in 5 to 10 years. This thing's going to be an absolute beast, and I just can't wait for share buybacks to start. And I'll wait, right? I'm not saying tonight, tomorrow, or next quarter, but I'm just saying, the cash is coming. They already have $4 billion on hand. Like, what the hell are they going to do with all of it? And to us as shareholders, the best thing I can think about is buybacks and potential dividends in the future. And for those of us that are planning on holding this for the next 10 to 20 years, I think we found a good one, boys, and I think we should hold on to it.
I think we found a fucking good one, boys. I mean, this thing is this is one of those quarters you pat yourself on the back as an investor and say, hey, maybe I'm not Warren Buffett, but I think I picked a decent stock. Arnie, your thoughts on this one?
I would just say yet. We will be Warren Buffett.
Your thoughts? What do you think?
Wow. Like the general thought is wow, but for many reasons. But for revenues, we have the margin expansion, like 37% free cash flow margin. Guys, that's insane. Again, combined with acceleration on the revenue side, which means they found the black magic. They went from the black box. They opened it and they found black magic. Now, there is one thing that I would put the attention on that is slightly negative, but. So if you go on the slide of US commercial customer count, we see that the year-on-year comparison is like plus 83%. So it's almost double year-on-year. But we went from accelerating, like getting 19% more customers in the last quarter, and now plus 13%, which seems relatively bad. Rather than getting 40 customers, we essentially got 32 customers. So a decrease compared with last year. But there's a but. I think what we got here are some fewer customers, but some very, very big customers. If you look at the slide with the deals, we see that we got 96 deals of at least 1 million. That's great. That compares with 87 as of the Q1 and with 66 compared with last year. So that's great. But the key number that essentially changed everything for the numbers is the last number on the bottom right. 27 deals out of these 96 deals were above 10 million. 10 million for a SaaS company is literally a lot. And that's almost the double of the Q1 deals, over 10 million. In Q1, so last quarter, there were only 15 million of at least 10 million. I think this component is what tells me, okay, Palantir was able to acquire customers that matter. Also because if you go on the net dollar retention, so that tiny little sentence that is always hidden.
Slide 30.
It is 114%.
30.
Just
Wait,
type
what's the
Control
NDR?
F, net dollar, and you find it.
Yeah, that's accelerating nicely.
Oh, 114%.
So last quarter, it was 110, meaning that the existing customers were expanding for 10% on average, while now we get the reference that existing customers accelerating to 114%. But if the total revenue growth is like 27%, it means that the growth that is really coming is coming from new customers signing these huge deals.
I would agree. And we're seeing it right now in the stock. Congratulations, everybody. We're up 19% after hours, 28.53. The street obviously likes these numbers.
I wasn't gonna say anything, but like if it went poorly, but now that it went well, I can say that I, as of like 3 hours ago, sold all my positions in everything besides Palantir, and I went all in Palantir again because I was so confident about this quarter. So congratulations to me. And my
Congrats, man.
Now if it falls 20% after hours, you have to repeat that.
Yeah, that's fine. That's fine. Like my average went from like 9.8 to like 18. So
okay, so you averaged up. Well, you have. So why did you make that move? And what are your thoughts on these earnings, Amir?
No, look, I was like, it's a win-win situation. It's not that I lost conviction or I'm less convinced about the other positions, but I just had a good feeling. So I was like, well, I'm just gonna put my whole portfolio into Palantir because if they miss or the stock goes down, that's fine. I'll just buy more. I can reopen the other positions. They were smaller in percentage anyway. And if it goes well, I reallocate tomorrow. So that's what I'll be doing. So like, no matter what, I couldn't lose in my head. So I was fine doing that move. But obviously, I don't recommend anyone to go 100% all in Palantir.
Exactly what happened after the Q4 results, because that's a very similar move to what I also made. Essentially, the stock was down just before the earnings, and I said, this makes no sense. Actually, the estimates are relatively small. Let's punish the market.
Yeah, and like if the results are good, then obviously they're going to get some benefits from the market. I think we have the Carp shareholder letter out, so let me pull that up. Where is it? Someone said it's out. I don't see it. Does anyone have it? Where would I get? Oh no, I think it's in the IR, investor relations. Yes. Yes,
They
here it
still
is. Here it is.
haven't-
I got it.
Where do
Okay.
you find this?
It,
They haven't updated news or events or.
No, you have to go to news and then it's there. Okay, so I'll read this and then we'll get our thoughts on the letter. All right, here we go. The playbooks of the past are no longer working, and even the people who had believed in them now know this. The enterprise software business had for years been crowded with companies whose principal innovation was selling a product that was capable of little more than reincorporating and shuffling data around in what amounted to yet another storage system. A premium was placed on developing software products whose principal purpose was to sell themselves, and a perception of value became more important than value itself. The rise and increasing sophistication of artificial intelligence capabilities have exposed the extent of dysfunction within enterprise software deployments. This was in the era of thin technology and an abandonment of any real interest in results. Those companies, however, are now being swept to the side. They attempted to seize the cultural and moral high ground at the expense of anything resembling a commitment to outcomes, and society, not to mention customers, have grown disinterested in their theater. At the same time, national governments around the world dreamt that the promise of economic integration would be sufficient to coax adversaries to the bargaining table, that a credible military capability was an anachronism. I'm sorry, I've said that wrong. That could safely be discarded. They too were wrong, and their miscalculation has had significant and lasting consequences. We have believed from the beginning that a singular focus on creating value for our partners is the only way to survive and succeed over the long term, and that the strength and dominance of the U.S. military must be preserved and defended. These beliefs, which should be commonplace and unremarkable, have today become radical and risky in certain circles of elite opinion. Yet, our business is growing at an exceptional rate because of these views, not in spite of them. It has become unfashionable to concede that we live in a world of constraints, both ideological and economic, but we will continue to build software for the world as it is, not as we wish it might be. We generated $678 million in revenue in the second quarter of the year, an increase of 27% over the same period the year before. The growth of our business has been reaccelerating steadily, and we see an unprecedented opportunity to capture and build on that momentum. Our financial performance, as strong as it is, has always been a lagging indicator of the character and momentum of the business, basically acknowledging, yeah, we haven't always performed the best in the numbers, but now the numbers are obviously catching up to the specialness that is Palantir. Our business has never been more profitable. We generated $134 million in net income in Q2, the largest quarterly profit in our company's history. The steady ascent of our profit reflects the unbridled demand for understanding the capabilities of our software. Our growth across the commercial and government markets has been driven in an unrelenting wave of demand for customers for AI systems that go beyond the merely performative and academic. The large language models that have transfixed the world will only be capable of transforming the work of a multinational business or a defense agency's operations if their power is unleashed within the context of an enterprise software system that is the opinionated view of the world, its idiosyncratic objects, logics, and physics. Models with trillions of parameters may be able to flawlessly mimic Goth, but without more, add little value to the enterprise. They have been born into this world without any sense of its contours or logic, or indeed a conception of truth or basic facts, let alone the collective knowledge and insight into the operations of an organization with 500,000 employees. Basically saying, hey, you need an ontology. The language models that have captured our collective attention have the ability to approximate truth. They are incredibly capable of probabilistic engines that have nonetheless have innate sense of north or south and struggle to solve their own complex analytical problems. Such models are necessary but not sufficient. Something more is required. They are wild animals whose power and capabilities must be tamed and harnessed, and we are now seeing what is possible once they are. Palantir stock after hours, $28.06. Our flagship AIP platform was launched just over a year ago, and it has already transformed our business. In Q2 2024, we generated $159 million in revenue in the U.S. commercial market alone, an increase of 55%. The growth rate was even more significant at 70% year over year when excluding strategic commercial contracts. And the persistent and unbridled demand for our software for an effective enterprise platform that makes AI capabilities useful to large institutions shows no signs of relenting. We have been beginning to set out to build software products that provide our partners with a structural advantage over their adversaries and competitors. We are not and have never been interested in marginal improvements or remedying modest inefficiencies. The right software properly wielded can and should transform an institution. And it is that ambition that has won over not only our existing partners, but also an entirely new cohort. It may be easy to forget that only 4 years ago, we had 14 commercial customers in the US. We now have nearly 300. Our commercial customer count in the U.S. commercial market grew 83% year over year and now accounts for half of all of our customers. The ascent of our business in the United States in particular is a reflection of the dynamism of American culture and the willingness for companies and institutions in this country to adapt and adjust when presented with new conditions. The U.S. government has begun awakening to the scope of the opportunity ahead. This past quarter, for the first time in our company's history, the trailing 12-month revenue in our U.S. government business, including defense and intelligence agencies, surpassed $1 billion. The terrain for every institution in the world that seeks to survive has shifted as a result of the arrival of LLMs and their capabilities, and our partners in the United States have been by far the quickest to adjust. The incorporation and deployment of LLMs will be one of the most telling proxy indicators of national outperformance moving forward. Whether other countries in the world adapt in a similar way will be a measure of their vitality and competence. Sincerely, Alex Karp. It's a hell of a fucking letter, dude. It's a hell of a... This is why you invest in this company, bro. This is why you give a chance to Karp. Vince, let's get you in on this. How do you think about these earnings?
Amazing. I mean, we're firing on all cylinders. I did the opposite of Emir. I sold covered calls because I had to. I got into a very unfortunate situation that I was going to get margin called, and my calls are on $24 and I got paid $3. So it's like I sold my Palantir at 27, but I'm still happy for the results.
Well, see, the cool thing about this is, Vince, even though you had to sell some of it, these results, I would imagine it makes you feel excited to eventually buy back in, right? Because you think the risk reward is there.
I mean, I didn't sell. I sold the covered calls, right? So, yeah. So, and it's March 2025 covered calls. So anything can happen until then. And I can roll and handle the position. So yeah, but I'm very happy with the numbers. It's everything we wanted to see. We're firing. The thesis is alive and well and better than ever.
Arnie, your thoughts on that letter? Anything Karp said there that got you excited?
Isn't it so cool that once you are so deep into the company, obsessed into tiny details, essentially you can have a sense of what Karp could say and say, oh, actually, we were not that wrong.
Yeah,
essentially.
Go ahead.
I mean, essentially what Karp said is exactly what we have been reiterating all over again.
I think he posted his last shareholder letter into ChatGPT and said, please rewrite this letter for this quarter.
Karp.
And that's, yes, as Karp. And that's what you got.
Yeah, I agree. I mean, look, Karp, every time he puts up numbers, he makes anyone who analyzes the stock look a lot smarter, right? Because, and we're not that smart. We're just echoing what Karp has said. And Karp has said, hey, AI is one of the largest opportunities in the market. And Palantir is the one thing, and Arnie and I should know this better than anyone else because we went to AIPCon. We got to meet Alex Karp, and we got to talk to a lot of employees. And at its core, the employees said, hey, what we're building is special because of the ontology. And so if you understand the ontology, you understand that that is what makes AI operational for the enterprise. And if you understand what it means to operationalize AI, then you understand you have to have an ontology. And obviously Palantir offers that. Let's get CNBC's coverage right when the results came out.
78 million, also better than estimates for 652 million. Q3 revenue guidance, that was coming in at 697 million to 701 million. That's also higher than the street. Full year guidance raised $2.74 to $2.75 billion with adjusted operating income from operations, U.S. commercial revenue, and adjusted free cash flow all also raised for the year. Now for Q2 specifically, U.S. commercial revenue, that was up 55% year on year to 159 million, better than expectations. U.S. commercial customer count up 83% to 295 customers. A reacceleration in U.S. government revenue as well, 24% year on year, 8% sequentially to $278 million. And Palantir closed in all 27 deals over $10 million in Q2. Now, CEO and co-founder Alex Karp telling me the results indicate to the market that, quote, yes, AI is valuable. Yes, you can stick by the West is superior, and then you can organize your business around that, and you can make money and do very well, which is what no one believed. On geopolitics, Palantir is a software prime contractor. He calls the environment, quote, really crazy dangerous, saying, quote, moving this into a safer position is going to be forcing our adversaries to understand we're serious and we have methods and means that they don't have. Now, on commercial growth, Palantir's AIP boot camps continue, but Karp telling me, quote, our serious customers want to move so quickly into production, we can't do as many. On whether winners and losers in AI are already emerging, this is certainly something the market is debating right now. Karp saying, quote, very few people have figured out how to do this in a way that is financially viable, meaning the people providing it become profitable. I mean, the single most important number for our Palantir AI narrative is that we're profitable and the revenues are going up. Bottom line, as investors debate how and when all of this investment in AI will pay off, for Palantir, it already is, with another very strong quarter across the board. And you can see shares bucking today's trend, up more than 18% right now. Shifting gears, a little bit of pun intended. Lucid results are out. Phil LeBeau has those numbers.
Boo. By the way, guys, I think we lost a government customer. That's only happened twice before. That's kind of
okay. Yeah, we'll get into the nitty-gritty details of that. I think the call starts at 5, if I'm not wrong. The call starts at 5 o'clock, so we have 30 minutes.
You guys know why this is so significant, this earnings? Because I think this is the first earnings where you can really see the results of the boot camps working. Like, it was a huge question mark before, like what's like, because we saw the customer numbers growing a lot, right? But we didn't know, like, are these guys converting? When is it going to show up? How it's going to show up? Maybe you guys talked about this before I came, but it's a very significant earnings from that viewpoint.
Yeah, I would agree. It seems like boot camps are pulling off. Go ahead, Amir.
You want to look at the results in some charts, similar to what we just quickly, as Matt mentioned, SPC as a percentage of revenue is up roughly 1%. I still think that 20 is or 21 is in line with the industry standard, more or less. I think only ServiceNow is something like 16%, but otherwise it's still better than Datadog, Snowflake, and companies like that. So it's not horrible. It would have been nice to continue this downtrend to see like something like 19.5. But yeah, 21, not the biggest thing. So let's start with revenue. Better than what we shared on Palantir Weekly, 27.2 with 678. Fabulous. And keep in mind, it was a weak comparison period. Here are some growth rates. So commercial grew 32% and government grew 23%. Here, I was a bit disappointed. I was expecting 60% commercial revenue growth because the comp period here was really weak. Still, 55% is nothing to scoff at. But you can really see like how poor of a quarter it was in terms of commercial revenue if you look at the quarter-over-quarter number, which is only 6%. So I was expecting something like 60% year-over-year and 10% quarter-over-quarter. So a bit disappointed there. Commercial customer count was, I think, exactly as we talked about on Palantir Weekly. And we can really see the AIP impact here. So prior to AIP bootcamps, like the growth in net new customers was like really stagnating. And then we have this exponential growth curve after that. So 13% quarter over quarter, up to 295. The net addition of customers was only 39, which means 41% year over year or 7.0% quarter over quarter. So like there was some disappointments, I think, especially in government. I think we lost a government customer. We didn't increase. That's interesting. I'm curious to see if they're going to mention anything about that on the call. Yeah, those are the same charts that we shared on Palantir Weekly, just an update. Roughly exactly as we spoke about. So
yeah, no, the numbers are looking pretty good. Growth estimates were much higher or pretty much in line with what we expected, but they beat a little bit more on the top line on customer count and revenue. I think all of us thought 665 to 670 made sense. 678, again, a pretty decent beat. Let me read out some of these super chats. We have 30 minutes, guys, until the call starts. Josh says, thanks, fellas, for all your hard work. You made me a lot of money. Cheers. Congrats, Josh. I'm sure
hell yes.
I'm happy a lot of
people can PayPal me 10%.
David says, if Palantir hits $40 by the end of the year, can we get a 2-hour karaoke request with a MIT special YouTube live event? Dude, I wanted to be a singer when I was younger. I don't think you guys want to hear.
I'll sing.
I don't. Okay, we'll do it, Matt. Let's do it, Matt. That'll
take these broken wings. Sorry.
When $40. When $40.
Oh, okay.
We're
okay,
not
okay.
there yet.
Yeah, it's not there yet.
And
not there yet.
45 Matt sings and strips.
Yeah,
I think people will pay for me not to.
There's different websites for that as well.
Yeah, I think
David,
the stock just went down. I think the stock just went down.
Yeah, the stock went down. Yeah.
David says, a shareholder of the Palantir, what's most important to me?
Please below 45.
When will Palantir focus on the medium-sized commercial businesses and disrupting other companies taking market share with their AI AIP? I think some of the numbers we're seeing shows they are going a bit more downstream, not like dramatically downstream, but we are seeing a little bit more diversification in their customer base as well.
I think they are. They shared during the latest AIP con, like they had a presenter which is like tiny in comparison to all the giants that they usually have. So I think like AIP and boot camps are like the perfect way to branch out and be able to capture all size businesses.
So let's hear from the chat. What do you guys think in the chat? I want to know everyone's raw thoughts. I mean, exceptional quarter. Numbers are pretty damn good. As a Palantir investor, it now feels like we are in growth mode, which is something that we haven't felt for a couple of years, right? Because we were figuring out how to grow, and it feels like they've really figured it out. The tone of the letter, I can't wait till Karp speaks, but the tone of the letter is, hey, it's really hard for other companies to do this. AI only matters if you have an ontology. And we're a special company that has 20 years of experience of figuring out how to build these to transform enterprises. He uses the word transform. Why would you buy some shitty off the counter software when you can spend a little bit more money with us, but you can get real value? And so I think as a Palantir investor, you are definitely betting on Karp taking us to the promised land based on this idea that we provide value and then we win. We don't try to nickel and dime you just to be able to show you how transformational our software can be for your enterprise. And now that the market's woken up to the fact that they need an AI strategy, if AI is real, then it seems like Palantir is obviously capitalizing on that momentum. And we're not even in the S&P 500 yet. We're not even in the S&P 500 yet. I mean, that's another big deal. It seems like hopefully that'll happen towards the end of the year. Neil, go ahead.
Yeah, no, last quarter he added in his letter the following: our intention is to make our AIP, or artificial intelligence platform, the most dominant infrastructure in the market and power the effective deployment of AI and large language models across institutions. I think they're doing a good job at that.
I think they are as well, dude. And like, you know what's so cool about investing in a company, especially when, you know, people don't want to invest in the company, when you're being a little bit more contrarian, is that when they actually follow through with what they execute on, like there's thousands of companies in the market, most of them are full of shit, right? There's like maybe I would say 50 to 75 companies that are really worth looking at and like actually taking the time to analyze. When you find a good one that's special, even if the stock is not where you want it to be, you really go deep into it and you analyze, and then you figure out, okay, if they do X, Y, and Z, I think the market will respond. And everything we got on this earnings to me is showing Palantir is executing against sales, go to market, enterprise deal conversion. Like there's so much they're doing that's right. And they have swag. Like they're cool. Like they're actually fucking cool. Like it's just a cool company with a cool CEO that's ready to take over the world. And I feel like a lot more people are going to be entertained by what Palantir has to offer and eventually take a position in the company. Arnie, go ahead.
This makes me think, how wrong is the sentence, never marry to a stock or a company? I know it's popular because many very famous investors have said that, but I would argue marry the stock if it is the right one, because it is when it is the right one, but you really want to be deep and confident. You don't want to be married into crap companies, but if you find the right one, the one that executes, is exciting to follow, you are happy to follow because you can get obsessed over that, spend more hours than Wall Street analysts that always come late, then marry to the stock.
Just like a wife, not a Tinder person.
Yes, that is also true. All right, we got 20 minutes. Let me ask a question now. We got to ask this question, and I know this question sucks, but the question has to be asked. Look, the stock's up 16%, obviously going against the market, given the market has fallen. Do you think we can hold this momentum? Quite frankly, I don't care if we hold it or not, because I think the performance of the company is so strong that it justifies eventually getting to this price and further. But do you think tomorrow the market actually buys it up 20%?
Let's make the inverse question. Why shouldn't the market buy?
Or here's some more interesting question. Where would Palantir be after this report if we would have been able to keep like 28 going into the earnings? Because now we're just back to 28. But if we started off 28, would the market still reward us with a 15-16% up? Or
dude, I think these numbers are so good. I think it would have broke 30.
Yeah,
these numbers are phenomenal.
I think so too.
I mean, we went from 22% expected to 27 while expanding margins.
Yeah,
that's crazy.
No, while that's a big thing. So we got to repeat that. We went from 22 to 27% year-over-year growth while expanding margins. We didn't have to sacrifice on the margins of the business. That's why the rule of 40 went to 64%. The upgrades as well. Yeah. I mean, the upgrades have to come after this one. I would imagine $30 targets across the board, definitely from Bank of America. And then Citi, Jefferies, all those guys. I don't know, man. It seems like maybe it can hold its multiple. I don't think one could argue that Palantir is super cheap at 28 after this quarter, but I don't think you could say it's super overvalued like, you know, people were thinking a month ago when it ran to 29. So
I think this is the point. Palantir seemed overvalued because if you look at it from a free cash flow, enterprise value price to free cash flow, it seemed expensive. It almost touched 70x. But as we underscore many times, these expectations were based on slower revenue and very lower margins. So with both the beat on the revenues and the margin expansions, the multiples that seemed expensive, now they crash, making the stock cheaper, similar to what NVIDIA did quarters ago.
Yeah, and here's the thing. This is not the blowout quarter, right? Like we like the numbers are good, but they're not like, you know, NVIDIA level March 2023. So that quarter, if it's coming, I mean, we haven't had it yet. And so it kind of gets you ramped up for what will that quarter look like when they're reporting 45% year-over-year growth and, you know, upwards of 900 million a quarter. So it looks like the future is bright. It does not look like anything I'm seeing in the numbers, and we still have to go through it, is a red flag at all.
Go
ahead, Neil first, then Arnie, go ahead.
No, during the call, like Emir said at the start, I would love to get more analysts on so they can get more questions to the public and we get more answers, especially now, because last quarter we had, Dan Ives, I mean, his question wasn't even answered, I think, fully. The conversion rates of boot camps, we didn't really get the full answer. Now, if Emir tells us that there is a government client that has left, apparently, if we could get more information on that, that would be great. And then, dividends? No, anyone?
Yeah, who wants their dividends? Arnie, go ahead.
I just forgot to say.
You forgot you were going to say. Okay, so let's ask this question then. What do you think Karp's going to focus on this call? Obviously, the results are really good. Is he going to start focusing on the AI opportunity, or kind of where do you think his angle? Last quarter, he kind of focused a little bit on geopolitical stuff, Germany, France. What do you think his angle is this quarter?
Right. Essentially, we went from last year where we were craving to find a positive signal, and now we're at the point we almost struggle to find a negative angle.
Yeah. Think about that, right? I mean, what's negative? Put in the chat. If you saw the numbers, I'll pull up the numbers again. What do you think is really something you can get upset about? You know, you can nitpick here and there, but I don't think there's anything to get super upset about looking at the numbers.
What I'm curious over is if we speak about the valuation, I think that the 20, like if you think that the price is going to go higher from this, you're still presupposing that we will accelerate further from here. The margins will get better from here. I obviously haven't had time to really do the numbers, but I'm curious if he's going to focus on that to say that, okay, like this is just the beginning and it's going to just get better and better, or he's going to say that like this level is good and we're going to stay at this level now. That's what I'm the most curious about.
Yeah, and I think it's not Karp's personality to be stagnant. So I think the tone is going to be, we're going for it. we're going to the moon. Remember, I mean, Karp, people forget, Karp said it in an interview in 2021, he thinks the company can be worth 20 times more than what it was at the time. At the time, it was worth about 45 billion. So he's, arguing for, obviously.
I mean, he also said 4.5 billion by 2025, and it's looking kind of bleak on that one.
I get it, but my point is his ambitions are to make this $1 trillion company. And he really does believe there's a lot of potential there. So I don't think his personality is going to be, yeah, we did really well. I think his personality is going to be, motherfucker, hop on the train or the rocket ship, because we're going, right? You're either with us or without us.
Well, even if he says $1 trillion and he misses just as much as he missed the 4.5 revenue and he only gets 3.2 or 3 point whatever, I'm okay with 700 billion in market cap.
I believe Karp on 1 trillion more than I believe Musk on 30 trillion. Let's put it that way.
I think they're going to come out swinging on this call. And here's the thing. The core thesis for Palantir investors is AI, to make it meaningful, you need to have an ontology. I think Karp is again going to stress this ontology argument. I know he's been talking about it for 2 years at this point, but the more investors that understand this LLM stuff is a commodity. OpenAI is losing $5 billion a year. GPT, Gemini, Llama, they're all competing, but they're all competing to derive value for people, either consumers that say, hey, ChatGPT, make me a picture of blah, 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 or the enterprise that's like trying to operationalize a scheduling for nurses and needs AI to help them. Obviously, one of those matters more than the other. And the question becomes, what software company on the entire planet provides the tools, the framework to make those LLMs operational? And if LLMs are only expanding, I mean, you got Jensen Huang talking about 100 trillion parameter LLMs. Right now, I think the most we have is like 600, 700 billion. They're going to get really intense. And if that happens, then Palantir is going to be needed. Arnie, were you going to say something or no? No? Vince, go ahead.
I was just going to say that, do you guys realize that there has been a recent AI sell-off because investors started asking questions like, how come we're investing all these billions into chips and there's no return on the money, right? And Palantir has just become the only company that is actually making good money on AI. And I wonder if this is going to drip into the valuation of Palantir, because it's really currently a unicorn on the market. Correct me if I'm wrong. But I believe it's the rare unicorn that investors are looking for, that is an AI play and is actually making money.
Yes. Real quick, I have to pull something up. I just got a...
they are
real
making
quick, hold on 1 second, real quick. So Shyam Sankar will be on Bloomberg tomorrow. So just got the update from Bloomberg. Shyam Sankar will be live on Bloomberg tomorrow. Go ahead, Neil.
So it's true that not that many companies that are spending so much money are making money thanks to AI right now, which is probably why we're seeing a small pullback, other than the chip makers, because obviously you got to buy the chips from someone, so they're making money. But all other companies, smaller companies that have spent a lot of money, will probably look around them and see, why are we spending so much? Why aren't we making money? Let's look for an actual solutions that solves problems. And then eventually they'll make their way to Palantir, which is what Alex Karp has kept on saying to companies that still don't want to pay the price. They're like, okay, go try other competitor. Let's see if you can make it work.
Yeah, I 100% agree. Real quick, Marcus says, thank you for the super chat. Recession fear just started on job numbers. Let's not forget that. That could be a speed bump in the short term. Correct. The macro headwinds could definitely be a speed bump to the gains we're seeing after hours. But in general, the company earnings have justified some of these results. I agree with you, Neil. Like when Arnie and I were at AIPCon, we talked to the Palantir employees, and one of the Palantir employees told me Palantir is a methodology more than it is a company. It's a way of life. It's philosophical. And what they meant by that was, I think if I were to sum it up, it's, can you be so good that it's undeniable how good you are, and that you earn your keep, right? You work for the value that you provide, and then you are paid accordingly. And I think in all elements of life, you have to embody that. So for me, with this channel and growing this YouTube brand, it's all about how can you give so much value to the audience to the point where they have no choice but to pick you over the competition. obviously given content is super competitive, right? Amir just cost 1,000 subscribers on his YouTube. That's going to be in the description. He just realized how important it is providing value to people, not asking for money, not grifting for some stupid course or Discord or Patreon, but just saying, hey guys, these are my perspectives. I'm going to be here every day. I'm going to try my best, and hopefully you keep coming back. And I think that's why Palantir's not been profitable for so long, because they knew if they could keep building, innovating, not acquiring, but working within their own talent pool and building amazing products, eventually the money would come. And now we're seeing the money start to come. And I think that methodology carried out over the next decade, as long as they execute, I think that's a winner over the long term. And I think that's something everyone wants to be part of. Arnie, your thoughts?
I was thinking how we really need to thank Nadella, Microsoft CEO, essentially for giving the hint, hey, Palantir is a leader, but why should you push another company if not because it is contributing to your bottom line? And the way Palantir can help Microsoft push to the bottom line is to essentially getting more clients that they spend on cloud thing by using Palantir. So essentially, we got a nice assist from Nadella.
Yeah, let me actually pull that up for those that don't know what you're talking about. So we had Satya Nadella, and some people said this wasn't a big deal. I felt it was a big deal, and I think a lot of us in the community felt it was a big deal because we finally got acknowledged by one of the leaders of AI, of a $3 trillion CEO, who said, "Hey, Palantir is a leader in their industry." So this was Satya Nadella in the earnings call a couple weeks ago.
The number of paid models as a service customers more than doubled quarter over quarter, and we are seeing increased usage by leaders in every industry from Adobe to Novo Nordisk and Palantir. Now on to data. Our Microsoft Intelligent Data Platform provides customers with the broadest capability.
I was a little excited. I was a little excited.
Just
cool,
share my
man.
Screen real quick. I forgot to show a slide. So here's the company reported free cash flow, which is adjusted for stock-based compensation. So cash from operating activities minus capex and minus the SBC. If you look at the free cash flow, if we don't use decimals, it's exactly the same as the last quarter, but lower margin. So that's kind of interesting. Just for the people who wanted to see the free cash flow charted out, here it is. So interesting. Exactly the same amount as last quarter. I don't think I've ever seen that actually.
But how did their margin go up though, if it's the same number on a higher income? Or yours is a special calculation with the...
No. There was more cash paid for employer payroll taxes compared to this quarter. So even though the net cash provided was more, and the most of it was less capex used and more cash paid for employer payroll taxes compared to this quarter, like 13 million more. So that's the difference in margin.
I think the other thing that's important around Palantir is that you are investing in people, and they have some of the smartest people in the world. Stock-based comp went up slightly, but I think investors are willing to handle that if you hire really smart people. They haven't acquired a company, I think, in the last decade, maybe a little bit longer than that. Whereas you have other companies like Snowflake, acquired 3 companies in the past year. So the lack of acquisition and focus on R&D internally, to me, is leading to some of these results. Because, AIP came out a month after ChatGPT had 100 million users. So they stepped on the opportunity, and now they're just trying to scale it as quick as they can. Yeah, you've got Bloomberg will have Shyam Sankar tomorrow to discuss these results. And again, they raised guidance, which is another big thing the street wanted to see. And the street got it today as well. All right, we got 7 minutes until the call, folks. Let me know what you guys are saying in the chat. I know people are super excited. I tend to forget, there are people in this community that have lots of shares. I've met some of you guys. We're not talking about a couple thousand shares. We're talking about millions of shares. So $1 moving up or down definitely impacts a lot of people. And I'm happy. I'm happy it's doing well for people.
I hope I will go there too.
Yeah, well, one day you'll get there. Vince, go ahead.
No, I just saw somebody in the comment. I still don't understand what Palantir does. And I'm like, with all these YouTube channels, all this content, like how is that possible to still not understand what Palantir does? So I'm wondering if that's a problem for this person, or it's like a general problem for investors.
So look up Chad Walquist on Twitter.
Yeah, let me
explain it in layman terms.
I was just about to do that. Let me give a quick shout out to 2 Palantir employees. If you guys are on Twitter, again, everyone's Twitter who's on the stream is in the chat. Please make sure to follow them. Chad is someone you want to follow. I'm putting him in the chat right now. He has been educating everyone on Palantir. He's been responding to hundreds of people a day, trying to get them to really understand the thesis of this company. So this is someone you should follow. And then Iliano is another person who has been heavily engaging with retail. Iliano is the only reason Arnie and I got to meet Alex Karp at the previous couple events we went to. So please make sure to follow him as well. One thing I will say about if you don't understand Palantir yet, I think it's a question of laziness more than anything, right? And I don't say laziness in a negative way. I just mean to say that it's about like actually just watching a couple of videos and understanding. I think this whole black box argument is the dumbest thing ever. You could say that 5 years ago. At this point, it's pure laziness if you call them a black box, and it's your lack of, your lack of willing to do research. And it's not hard research. It's a data analytics company. It's not the most secretive company in the world. And I think more and more people are going to start to do research now on Palantir.
I wonder if this comment is not like this prank comment, like on your live streams, that they're like, it's Amit's birthday today, and then everybody's like, it's Amit's birthday. Or happy birthday, So.
It's not my birthday, dude. Everybody says it's I don't know why they wish me a happy birthday every day. Oh, Dan Ives just tweeted. He just This is what Dan Ives tweeted. This is what Dan Ives. I love Dan Ives, dude. You gotta love him. I know some people don't love him, but at the end of the day, he's the one talking to the toots about Palantir. And there you go. Messy of AI. You got to respect it, dude. Dan Ives has the ear of institutional investors. I know some people's cup of tea as an analyst, but you'd rather have him on your side and someone echoing the message, especially because he talks to the customers, right? He has the ability to actually talk to these people versus an analyst like Rishi.
Well, we first had the opportunity to talk with Dan Ives because I personally was very aggressive towards him. And I think I was wrong into being so critical. Like, I think each analyst needs to be considered for his strength, his weaknesses, and in the case of Dan Ives, we need to understand that he's not much a numerical guy, but he does talk a lot with people, so he has a very good context. So when he says something toward, okay, look, these guys actually understood something that all the other people don't, you'd better listen to him.
Yeah, I would agree. 3 minutes. Go ahead, Amir. Go ahead.
No, I was just gonna add, like, he gets it in broad strokes. I think, as Arnie mentioned, like if you look at how he arrives at these price targets, I think it's ridiculous, stupid. But I mean, he also calls like C3 AI the LeBron of AI. So I mean, some people, I understand the hate. Like, well, he got lucky on some. Well, he does get it when he talks about Palantir. Like, you can tell that he does understand it. So in broad strokes, he gets it. In numbers, I would not listen.
Look, I don't care what he says about any other company, but when he talks about Palantir, he looks like he knows what he's talking about. He's talking to the customers. I'm like, well, all right, there you go. It seems like he hopefully understands the broader picture of it. All right, 1 minute 34. We should get Palantir's actual numbers. The first 20 minutes are probably going to be them reading off their numbers, and then after that, we should have Karp on the call. Amir, go ahead.
I was going to say, I looked back when they had more analysts on, and the ones they didn't invite back are the ones that they had to remind to turn on their camera so that Karp could see them.
So what happened with Mariana? She had like... She was too good.
It was a joke, Vince. That's not why.
Okay.
That's not why. Like, if Karp has to remind you to turn off the camera, forget the invite to the next quarter. It's not happening.
Well, by the way, Palantir is among the few companies that actually make a live stream, so that also forces analysts to show off.
Do you guys remember what it was, the meme company that just had like a presser as their conference call? Was it GameStop or...
I actually don't know. I don't know.
I haven't heard about that.
I saw you cover it, Amit, that they didn't... Oh, no, or the whole conference call was just like this is our results.
Oh, it was
That's
GameStop.
good.
Yeah, that was GameStop.
Yeah.
All right, so we're waiting. We have Chris CRM in the chat says, I haven't been this excited since my wedding day. If you're up a lot on a stock, that'll do it for you. That'll do it for you. So they should be starting in just a little bit. And we will see what they say. And I actually like my wife. I love it. I love it. Let me refresh just to see if it's back. Okay, yeah, not live yet. Not live yet. Should be starting soon.
Where's Chris?
Where's Chris? Yeah, Chris is nowhere to be found.
Did he? Oh yeah, he closed his short position.
He closed the short. Yeah, he's out. He knew he couldn't stay short for too long.
Good afternoon. I'm Anna Saro from Palantir's finance team, and I'd like to welcome you to our second quarter 2024 earnings call. We'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our third quarter and fiscal 2024 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for, or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
We are thrilled to report tremendous results for our business, driven foremost by strong execution in our U.S. commercial business and continued U.S. government business acceleration. Overall revenue growth, excluding strategic commercial contracts, accelerated to 30% year over year and 10% sequential in Q2. Our exceptional results are a reflection of a market that is quickly awakening to a reality that our customers have already known. We stand alone in our ability to deliver enterprise AI production impact at scale. We are delivering these results in the face of an unprecedented enterprise AI opportunity. As noted by Sequoia, the revenue expectations from the AI ecosystem's infrastructure buildout have grown from $200 billion to $600 billion per year in just 9 months. The world is struggling with this huge problem. There's a great bottleneck between prototype and production. The world has also come to understand what we've been saying all along. The standard playbook does not and will not work. It cannot solve this problem. While many companies can build prototypes, the leap from prototype to production is substantial. Palantir has made that leap. Our focus is on deploying enterprise AI in production, solving meaningful problems for our customers. We have the right products at the right time, and our history means that we understand this $600 billion opportunity unlike anyone else in the space. We are uniquely situated, and you see that in our results now. Last quarter, we signed 27 deals worth $10 million or more and closed nearly $1 billion of TCV. One of the most notable indicators of our delivery is the volume of existing customers who are signing expansion deals, many of which are a direct result of AIP. We continue to see the greatest transformation in our U.S. commercial business, evident in the many AIP-driven deals closed last quarter. Our U.S. commercial revenue, excluding strategic commercial contracts, climbed 70% year over year. Our U.S. commercial ACV closed was up 44% year over year and up 19% sequentially, while our deal count in US commercial was nearly twice what it was just a year ago. We maintain conviction in our ability to land new customers and subsequently expand those engagements as we sharpen our focus to taking our customers across the chasm from prototype to production. Tampa General signed a 7-year expansion, deploying AIP to deliver a care coordination operating system where we've helped them reduce patient length of stay by 30%. Panasonic Energy of North America signed a 3-year expansion using AIP across finance, quality control, and manufacturing operations. AARP shared they're utilizing AIP to provide targeted, personalized experiences for their 29 million unique visitors on a monthly basis. Eaton deepened our relationship, leveraging AIP to modernize ERP deployments in addition to finance, sales, and supply chain use cases. Kinder Morgan signed a 5-year Foundry and AIP enterprise expansion with production use cases including storage optimization, pipeline integrity monitoring, and power optimization. These are just a handful of the significant expansions last quarter into production with AIP, and the magnitude of expansion is notable. A major North American industrial company started working with us in late 2022, expanded to a $5 million run rate in 2023, and further deepened engagement to a $20 million run rate this year. One of America's leading hospitals began working with us in 2021, generated approximately $1.5 million of revenue in 2022, over $4 million of revenue in 2023, and is on track to generate nearly $15 million of revenue this year. With regard to landing new customers, U.S. commercial customer count grew 83% year over year last quarter. Bootcamps remain a key go-to-market motion, particularly for prototyping what is possible with AI, but the real opportunity and our unique capability lies in moving from prototype to production with these customers. That is where we are focused. We closed a 7-figure deal with a large wholesale insurance brokerage firm for an initial production automated policy review use case just 16 days after the bootcamp. A leading convenience store chain went from prototype at a bootcamp to paid pilot in 25 days, then converted the inventory management and pricing optimization use case into initial production immediately following the pilot. Our product charisma remains unparalleled. We plan to leverage this combination of bootcamps and pilots with a focus on moving towards high-value production use cases to continue landing new customers. At the same time, we are heightening our concentration towards building deep production-level relationships with every single customer. The phenomenal strength of our U.S. government business shows the power and scale of our enterprise software delivery. Our U.S. government business continued accelerating, growing more than 8% sequentially for 2 consecutive quarters. We proudly received several notable awards last quarter, including a production contract from the Department of Defense Chief Digital and Artificial Intelligence Office, CDAO, to deploy and scale an AI-enabled operating system across the DoD, starting with an initial order of $153 million to support certain combatant commands and the Joint Staff, while additional awards can be made up to $480 million over a 5-year period. This award reflects the criticality of our software in our nation's defense capabilities. Shortly after, CDAO announced a new initiative, Open Dagger, to enable defense tech companies, traditional contractors, and government developers to develop applications and integrations on top of Maven, powered by Palantir, in a contract worth $33 million. We maintain pride in the mission-critical impact of our products and celebrate the long-term strength of our U.S. government business, evident in last quarter's results. Looking ahead, I've never felt more bullish about our business than I do today. We're charging full steam ahead, leading our customers across the bridge from prototype to production, with our ever-expanding product capabilities laying the paths for that journey. I'll now turn it over to Shyam to share more details.
Thanks, Ryan. Our customers have been ahead of investors in markets. Customers choose us not because we're delivering proofs of concepts, but because we deliver proof. Years of foundational investments in our infrastructure, and in particular in ontology, I'll note a widely ignored and discounted innovation, have put us in the pole position. Gen AI has made prototyping incredibly easy and charismatic. but with the same utility of a PowerPoint slide. The journey to production, as the market is now discovering, is fraught and requires a foundational set of technologies that we have uniquely invested in, creating the product pipeline that's needed to harvest economic value from AI. And that's a journey that we were pathfinders on with the US Department of Defense starting in 2018, and one we continue to be the leaders in across both segments, government and commercial today. The bottleneck and the transition from prototype to production is a very hard set of technical problems. We didn't build those technologies eating berries in San Francisco. We had to be on the factory floor, in the foxhole, eating pain with our customers, seeing the secret truths of what does and doesn't work and metabolizing it into product. This has always been the secret of Palantir. It is the anti-playbook. Today's AIP developers will be the enterprise's next generation of builders. Apollo delivers eye-watering agility and responsiveness. AIP deprecates back-end development the same way that hyperscalers deprecated infrastructure, providing the mechanism to bring AI into production in the enterprise quickly. Our builder investments are feeding our product pipeline with our customers' developers in the wild. Compute modules have enabled the integration of our customers' own containerized applications into operational workflows. Today, this technology is powering exquisite missile warning systems in the US government and sophisticated production plan optimization across commercial. And Ontology SDK has enabled customers to build their own pro-code applications backed by Ontology, the critical ingredient for harnessing LLMs in the enterprise. And we pulled all these investments together in Code Workspaces, where we have enabled an end-to-end development environment that lets customers treat their business as code. These investments have made us the emerging choice, not only for application developers, but also data scientists. Our platforms have become the fastest place for our customers to develop, refine, and manage not only their models, but integrated offerings that deliver business impact. Once again, history is repeating itself with data scientists as they abandon the thin playbook products of the past. We recently hosted 2 Champions Road events, one in Denver and one in Munich, that pulled together the most experienced and prolific customer developers to share the latest on our roadmap, but more importantly, to surface new opportunities to go deeper. At build.palantir.com, developers in the US, UK, Canada, and India, amongst a growing list of countries, can now access a free developer tier and a library of quick starts, tutorials, and reference implementations for themselves. This developer movement is matched on the government side, whether it's with developers in Armed Forces Ukraine or the US Army. In government, CDAO's recent contract award on Maven will enable us to scale those exquisite capabilities to the DoD enterprise and to bring integrated JADC2 capabilities across space, cyber, electronic warfare, and logistics. The CDAO Open Dagger contract also enables defense tech companies, traditional contractors, and government developers to leverage Apollo and the Ontology Software Development Kit OSDK to develop applications and integrations on top of Maven, all powered by Palantir's Mission Manager. And finally, fresh out of the AIP product pipeline, we are launching a new offering, Warp Speed, to power American reindustrialization. The software playbooks have also failed.
I can do it.
And all the founders driving reindustrialization know it. This is why SpaceX built their own ERP. We created Warp Speed from our years of experience on the factory floors, helping customers build planes, trains, automobiles, and even ships. Today, we power production of jet engines, satellites, and weapon systems in the industrial base. Warp Speed, built on AIP, on our industrial AI, and with Ontology, is the modern American manufacturing operating system that reimagines how to bend atoms better with bits. At the dawn of World War II, we didn't have a defense industrial base, we had an American industrial base. Chrysler made missiles, and General Mills wasn't just a cereal company. This is also what our future must look like. It is clear that the nation must reindustrialize and mobilize at warp speed to win. This platform will transform production in the value chains that power our kill chains. I'll turn it over to Dave to talk us through the financials.
Thanks, Sean. Q2 was an exceptional quarter. Revenue growth accelerated to 27% year over year, exceeding the high end of our prior guidance by 5%, driven by the strength in our US commercial and government businesses. On the back of this strength, we are increasing our full-year revenue guidance midpoint to $2.746 billion, representing a 23% year-over-year growth rate. We delivered these tremendous top-line results while expanding adjusted operating margin to 37%, highlighting the strong unit economics of our business. We also delivered our 7th consecutive quarter of GAAP profitability, generating a record $134 million of GAAP net income, and our sixth consecutive quarter of GAAP operating profit, generating a record $105 million of GAAP operating income. Our revenue and profitability drove a 7-point sequential increase to our Rule of 40 score from 57 in the first quarter to 64 in the second quarter. Turning to our global top-line results. Revenue continues to accelerate. We generated $678 million in revenue, up 27% year over year and 7% sequentially. Excluding the impact of revenue from strategic commercial contracts, second quarter revenue grew 30% year over year and 10% sequentially. Customer count grew 41% year over year and 7% sequentially to 593 customers. Revenue from our largest customers continues to expand. Second quarter trailing 12-month revenue from our top 20 customers increased 9% year over year to $57 million per customer. Now moving to our commercial segment. Second quarter commercial revenue grew 33% year over year and 3% sequentially to $307 million. Excluding the impact from strategic commercial contracts, commercial revenue grew 40% year over year and 8% sequentially. Second quarter commercial TCV booked was $377 million, representing 31% growth year over year. Our U.S. commercial business continues to see unprecedented demand, with AIP driving both new customer conversions and existing customer expansions in the U.S. Second quarter U.S. commercial revenue grew 55% year over year and 6% sequentially to $159 million. Excluding revenue from strategic commercial contracts, U.S. commercial revenue grew 70% year over year and 8% sequentially. In the second quarter, we booked $262 million of U.S. commercial TCV, representing 152% growth year over year. Total remaining deal value in our U.S. commercial business grew 103% year over year and 11% sequentially. Our U.S. commercial customer count grew to 295 customers, reflecting 83% growth year over year and 13% growth sequentially. We generated $148 million in international commercial revenue in the second quarter, representing 15% growth year over year and 1% sequential decline as a result of continued headwinds in Europe. We continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond. Revenue from strategic commercial contracts declined to $9 million for the quarter. We anticipate third quarter 2024 revenue from these customers to continue to decline to between $6 to $8 million compared to $15 million in the third quarter of 2023. We continue to anticipate 2024 revenue from these customers to be less than 2% of full year revenue. Shifting to our government segment. Second quarter government revenue grew 23% year over year and 11% sequentially to $371 million. Second quarter U.S. government revenue grew 24% year over year and 8% sequentially to $278 million. As Ryan mentioned, we were selected for several notable awards in Q2, which led to the strongest U.S. government bookings quarter since 2022, reflecting the growing demand for our government software offerings. Second quarter international government revenue grew 21% year over year and 18% sequentially to $93 million, primarily driven by additional funding from a partner nation related to our ongoing efforts in Eastern Europe. Second quarter TCV booked was $946 million, up 47% year over year. Net dollar retention was 114%, an increase of 300 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q2 of last year. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. commercial business over the past year. We ended the second quarter with $4.3 billion in total remaining deal value, an increase of 26% year over year and 5% sequentially, and $1.4 billion in remaining performance obligations, an increase of 41% year over year and 5% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 83% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $254 million, representing an adjusted operating margin of 37% and marking the seventh consecutive quarter of expanding adjusted operating margins. Q2 adjusted expense was $425 million, up 4% sequentially and 7% year over year. We continue to expect expenses to ramp through the back half of the year as we invest in the product pipeline and hard technical problems in debottlenecking the journey from prototype to production that Shyam just outlined. We remain focused, however, on calibrating expense growth below revenue growth for the full year in order to continue delivering on our goals of sustained GAAP profitability and operating income. In the second quarter, we generated GAAP operating income of $105 million, representing a 16% margin, our sixth consecutive quarter of GAAP operating income and fifth consecutive quarter of expanding GAAP operating margins. We generated second quarter GAAP net income of $134 million, representing a 20% margin, our seventh consecutive quarter of GAAP profitability. Second quarter adjusted earnings per share was 9 cents, and GAAP earnings per share was 6 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 64% in the first quarter, a 7-point increase to our Rule of 40 score from the prior quarter. Turning to our cash flow. In the second quarter, we generated $144 million in cash from operations and $149 million in adjusted free cash flow, representing a margin of 21% and 22% respectively. We expect cash flow to ramp through the back half of the year in line with expected timing of government and commercial year-end collections. Through the end of the second quarter, we repurchased approximately 1.2 million shares as part of our share repurchase program. As of the end of the quarter, we have $973 million remaining of the original authorization. We ended the quarter with $4 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q3 2024, we expect revenue of between $697 and $701 million, and adjusted income from operations of between $233 and $237 million. For full year 2024, we are raising our revenue guidance to between $2.742 and $2.750 billion. We are raising our U.S. commercial revenue guidance to an excess of $672 million, representing a growth rate of at least 47%. We are raising our adjusted income from operations guidance to between $966 and $974 million. We continue to expect adjusted free cash flow of between $800 million and $1 billion, and we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Thank you for participating in our earnings. We founded this company to be a ray of light to America and our Western allies. And in doing so, we built software for the institutions as they ought to exist, not as they do exist. And of course, the whole playbook around building software, building institutional software, building software that would be transformative, and especially in the current context around AI and large language models, flew in the face of everything that people have been taught to know about enterprises, what makes them work, how they can transform themselves, what software products would be valuable, what software products people would adopt, how would they adopt them, how would you get value from analysts, users in the software context, how would you transform manufacturing, how would you use, in the current context, large language models, not as an act of self-flagellation or something that just makes a small group of people richer, but in a way that you can extract value in existential life and death contexts like the battlefield, or in institutional or commercial contexts like the transformation that is happening all across America and in some other countries. And in the face of this, we made bold claims that looked ridiculous to many people. One bold claim was these large language models will not work without foundational software. They will not work without a means to process them. They will stay something like self-pleasuring or PowerPoints, which is the purveyor, which are sold to institutions as a way of deceiving institutions from transferring their high value revenue to other enterprises without actually transforming themselves, which were addictive and thin and led to dysfunction in enterprises, much like their allegory in the political world of wokeism, became slower, dumber, and not able to actually produce results. And we built the infrastructure you need to move from self-flagellation, PowerPoints, and prototypes flawlessly into production. Production meaning your enterprise gets faster, it runs better, the margins are better, the people inside the enterprise become more valuable. Your tribal knowledge in your enterprise, the knowledge which differentiates you from all other enterprises, becomes truly valuable. It becomes a weapon in your hand, whether that weapon is in the commercial context to make what you know how to do better than anyone else work better than anyone else by making engineers better, by making the workers more able to do things engineers would be able to do, by treating your company as a portfolio as opposed to dots on a PowerPoint. We believed, and the numbers now show that we were right, that by doing this, we could give America and its allies a structural advantage in the commercial area, which we have seen, and our numbers prove, and arguably even more importantly on the battlefield, which we can't talk as much about, but is the absolute most important area where America and its allies have to have dominance and leadership, that we had a structural advantage. And what is gratifying about our this quarter, and in general about what we've done, is not the banality that we were right and the playbook purveyors are obviously somewhat laughable. It is that you can build a great business, be aligned with America and the West, that alignment will make you stronger and better, that your software products will actually be products and not PowerPoints, and that you can actually build something with the best people in the world, the best investors in the world, that will lead to structural advantages. Of course, all along the way, we had many, many doubters. We had people that thought we would never be profitable. Now we are over 7 quarters in profitability. I thought people that we would never be able to grow the revenue. We'd never be able to reaccelerate the U.S. government because of it's often opaque, but we asserted that product superiority would overcome many of the vicissitudes and difficulties of working with the U.S. government. Witness reacceleration. We asserted that our products were the precursor to making LLMs valuable, that we would productize how you create this value, much the way hyperscalers, as Shyam had mentioned, had productized other technical issues, and that we would give that productization to our customers. Witness our 70% after SPAC quarter, the third quarter in the row where we're growing at what amounts to a ridiculous rate. And there's witness the reacceleration of our global business ex-SPAC to 30%. Witness our backlog. Look at any part of our business. Then it is like, well, how are we doing this? Is a really long and interesting question that people will dedicate their academic careers on, but we do not have time to address, and it may not be learnable for everyone, but we do it. And the single most important part, however, of this is that we are going to play a determinant role in making America and its Western allies the dominant force again in this world. And because of that, the best times for this company are not in the past. I would say the single most interesting thing about this quarter, if you had to reduce it to one simple fact, after 20 years, after changing the way people do intel, after changing the way the battlefield works, after changing the way people procure software, after exporting our platforms to our allies, after punishing our adversaries, after building a commercial business, after DPOing, after seeing it all reaccelerate, the best times for us are yet to come, and we are planning to just take our energy and run this business as a business of which we are, which is our owners. We are owners with a very long-term focus for the best interest of our country, our allies, and our Palantirians and our investors. And so I'm very thrilled to have you participate in this, what for us means historic earnings. And last not least, the world is on the precipice of what could be a very severe set of violent interactions in the Middle East. And it goes without saying that at Palantir, we know where we stand, and we are very much supporting America and its allies in the Middle East, including Israel. Thank you.
Thanks, Alex. We'll now turn to a few questions from our shareholders before opening up the call. Axel asks, what is Palantir doing to be different from its AI competitors, and what is the company's plan to stay competitive?
Thanks, Axel. Well, all the value and where the market is completely bottlenecked is on that transition from prototyping to production. And that happens to be the place that we are most differentiated. That differentiation is built on more than a decade of deep technical investments, technologies like the ontology, OSDK, the primitives that we have that permeate the platform, security, functions on objects, actions, write back, machinery, automations, and a deep product pipeline that really is focused on addressing this very problem, on this transition from prototyping to production. And I think when you think about the Chat GPT moment, it so very clearly invalidated the thin product playbooks of the past. I think this bottleneck is doing that same thing to AI software. It is so easy to create an AI prototype, the equivalent of effort of making a PowerPoint slide, but it's actually very, very hard to get that in production, probably 10 to 100 times harder than traditional software transitioning to production. And therein lies our entire opportunity in the market. That's what you see with the expansions that have happened with Panasonic Energy and Tampa General. And that's what you frankly see in the numbers of this quarter.
Thanks, Sean. Our next question is from Jacob, who asks, we understand why Foundry has become the operating system for the modern enterprise. How does this change with LLMs?
Well, the market doesn't need point solutions, even if it's slightly addicted to them. And our customers can't solve their business problems with hyperscaler infrastructure alone. They need a system that organizes and orchestrates the interaction of their physical business with their technology, with AI and LLMs. In the same way that your operating system orchestrates and organizes your hardware with your applications. And in the same way that your operating system gives you application development frameworks like AppKit for Mac or WinUI for Windows, Palantir's OSDK and ontology is that application development framework for the entirety of your business that allows you to treat your business like code, leveraging the primitives that we've built that extend LLMs throughout your enterprise.
And just as a point that, we've already mentioned, but, a lot of what we're doing sounds complex on the outside, but what is not complex is the customers already understand they need it. So it's like a lot of our actual advantages, the customer is way ahead of investors, way ahead of people investing in this. And we're way ahead of our customers, and we have distribution. So typically in a revolution, the revolution comes from like small companies somewhere, but this revolution is coming from being ahead of where the customers are, and the customers are years ahead of what analysts and others think. And we are actually monetizing simply the fact that we're ahead of our customers and the years ahead of everyone else. And all of these things that Sean was talking about how does an ontology work with an SDK? How does that work with an enterprise? How would you actually use a large language model in a way where it's differentiated, meaning you use the right large language model at the right time, under the right conditions, in the logic, meaning in the way the business understands itself, within the context of the security logic of the business. Those things are largely not understood on the outside, but every single person in government who's trying to use them or who is using them, every single customer who's buying this, witness the numbers, they either understand this overtly or they understand that nothing else works. And in many cases, they simply understand that nothing else is giving them any value. And they're increasingly getting tired of paying for things they either don't use or they shouldn't use.
Thank you both. Our next question is from Dan with Wedbush. Dan, please turn on your camera and then you'll receive a prompt to unmute your line.
Look, I think a historic quarter for Palantir, so congrats. Does it feel out in the team? Does it feel like you're starting to now, in terms of the conversions from the boot camps to deals, it's starting to accelerate? It seems like that based on the actual quarter. But can you just give some granularity there?
Yeah, I can give. First of all, I think the numbers speak for themselves. We closed 27 deals worth more than $10 million or more, $1 billion of TCV in quarter. And so I'll start with the numbers because they speak for themselves. Boot camps are an important part of that motion. We're seeing them expose customers to new opportunities and new potential customers to opportunities. That being said, it was, as Sean was highlighting, what everyone underestimates is the immense challenge of deploying enterprise production AI software at scale. And so we're very much focusing our energy and going deep in production with those customers. And that's the massive opportunity before us. And that's where we're running at full speed. You see that in the numbers. You see that in the customers' reaction, who are blown away by the impact we're having for them and demanding more and more in that direction from us. And really where we're focusing our energy.
Maybe a slightly orthogonal, indirect way of answering your question is, if you take the battlefield where these things, the few places these things are LLMs are in use, or the battlefield where other forms of AI are in use, and you take US commercial, what you're really seeing is a very tight learning circle. What works, what doesn't, why? And that's very different than places that aren't working. And America has many businesses that are very strong and they're very, very agile. So they're learning very, very quickly. And then much like people watching this call, they're like, oh, okay, this is working. There were leaders like you who predicted this would work, but most people actually, our customers want to see it in production and then say, okay, well, why is this working? And that's a separate. And what's very special about what's happening now is you have more and more people who are like, okay, I know this works. I want to understand exactly why and how would I expand it and why is nothing else working? And so that's leading to a very different motion. I think it's going to lead to a very different way of looking at our company in all areas, including financial areas, because it's like when you're making assertions, you need avant-garde innovators to look at it and say, okay, well, this is something that's not quite there, but I think it could work. And we're very much moving into the phase of, yeah, this is working. Our adversaries know this works. Our US military knows this works. People on the ground knows this works. And it's a very similar in US commercial. And that's what's generating the 70% number that is kind of, jaw dropping. Like the jaw dropping numbers are being generated by, okay, this works. How do I expand? And explain to me how it's working. Can we expand these things? And by the way, our innovation is also because we're like, okay, we see this works, but this could work 5 times better if we had different kinds of innovation that no one else has.
Thank you. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
Thank you and good afternoon, everyone. I'm going to try to squeeze 2 questions as usual. So the first one, I'm curious about Warp Speed. What is it? Is it like a new system that allows companies to build their own ERP system? Is something that runs on top of your existing old school legacy ERP system? Or is Palantir creating like a solution that is ERP? Like a little bit details about that. The second one is not just Warp Speed, but also all this American industrialization. GAO posted a report recently where they've said software and implementation are the 2 biggest barriers for the US to be able to produce the weapons that they need. What is the biggest barrier or like hurdle for the US primes or especially the old guard primes to come to you and let you help them reindustrialize, produce, and get back on track on these like multi-billion-dollar contracts they have? Thank you.
Yeah, thank you, Mariana. So with Warp Speed, it really is we conceive of it as an operating system for the modern American manufacturer. It touches not just ERP, but also MES, PLM, it's PLCs, so it's interacting with the factory floor. We think there's an opportunity to reimagine this. I think the kind of congenital defect for most of this software, it was designed historically in the 70s for the CFO. Why would you do that? If you were starting over today, you would build software that was designed for the head of production, that was focused principally on production. And then how you integrate both your extant legacy systems and use Warp Speed in place of the investments that you haven't made. I think the big opportunity, so if you go to the big legacy manufacturers and you say this, it sounds crazy. They've made a bunch of historical investments. They're not yet convinced or even aware of the fact that the legacy software playbook doesn't work. But if you go to new manufacturers, the one that are powering the reindustrialization of the country, they all know this. They're all alumni of the Tesla, SpaceX world where they built their own systems from scratch, principally because the other stuff doesn't work at all. And they also know they can't afford the 300 engineers it would take to build this completely from scratch, or the time it would take to do that. So there's this very powerful role of taking AIP, building the applications on top of it, using the OSDK, and delivering the integrated suite of applications that are also malleable to the business. Because I think one of the other key insights here is it's not actually believable that the same ERP manufacturing system that you use to build rockets is what you would use to build rackets. And what is the right way to think about grafting the software around the manufacturer in a way that gives them alpha, not just creates a huge amount of services for these system integrators? We live in a world today where it's $1 of license for $9 of implementation that never seems to quite work. Who is really happy with the implementation of these systems? Which ones are even happening on time? Who can say that those systems didn't fall apart in 10 seconds when COVID supply chain disruptions happened, right? There's an entire opportunity to reinvent this now. And I think the bolus of energy around national defense and reindustrialization is catalyzing this opportunity.
Well, and Shyam's leading this charge, but the reason it, I think, is likely to work is because not just America, but every allied nation is has the problem that they cannot get their military production to work. So your question is not really two questions. It's what are you building, and from my perspective, and why is it likely to work? And they're very linked. It's likely to work because in every single Western country, when you talk to these leaders in private, the conversation I often have with them is, what could we possibly do to make manufacturing work so we will actually be competitive on the battlefield? And the answer to that, for these countries, really is reimagine how you produce. And the people who do it are going to be people who are alumni of the companies that have actually built companies correctly. Call it the Palantir alumni, and people from the SpaceX network are really the only people who have done these things. And the first thing they want is a software program that will allow them, including with large language models and AI, to build the way you ought to build. Ought does not mean build near term in the interest of your CFO so you can IPO quickly and build something that's fake. It means build something that is real, build something that's sustainable, build something where the production is actually production of a product. And that aligns very squarely with how Palantir wins and how we build things. And that's why this is a super important thing we're working on.
Thank you. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end today's call?
Well, again, thank you for your support. That we've had good and bad times. This is a super important time for Palantir because we have proven to the world that what we do is quantifiable and real. We are focused on growing this company to be much more impactful, much larger, and much more valuable. We appreciate your support, and we know that many of you also support us because you realize that we are value aligned with your values, which means fighting to make the West a stronger and better place, including on the battlefield. And that battlefield may be upon us now, and we appreciate your support and do what you can to help America and help our allies. Thank you.
Thank you. That concludes Q&A for today's call.
Tyler wasted a road trip, man. What the fuck?
All right.
Not worth it to downgrade to 5 again, Tyler.
What are you talking about, Tyler? What?
He didn't join the call and ask a damn question.
Oh, Tyler from Citibank. Okay,
from the analyst from Citi. You wasted the road trip to Palantir.
All right, so that was the call. Let me set things up, and then we're gonna go around the room and get people's perspectives. So Palantir just had their Q2 earnings. Stock right now after hours, $27.49. It's up 14% on the day. Headline stats for those that missed: 27% year over year government growth, top line growth at 678 million, 27% year over year growth, 55% US commercial revenue growth, 24% US government growth, 83% US commercial customer growth. Karp said on the call, the most interesting thing after 20 years of building Palantir is that the best is yet to come. So let's go around the panel and get our raw thoughts on this earnings. I'll go at the end. I'll let people go first. Arnie, let's start with you. How did you feel about this
Actually,
call?
can I go first? I really need to go after.
Yeah,
I need to wake up in 3 hours and go to work. So I'm just going to go sequentially through my notes here. The biggest thing is that we have a new steak dinner PowerPoint, like common reference, like prototype to production. I lost count, like it could be a drinking game, how many times they said that. But I didn't really get it until Karp defined it towards the end, where it says that production, meaning that your enterprise runs faster, margins get better, people inside get better. It differentiates you from the opposition. It becomes a weapon in your hand. I'm like, what the hell? Like, I didn't get any smarter from what production means in that essence. But yeah, they spoke a lot. Ryan in the beginning said that they're uniquely situated to deliver enterprise AI in production, which is what we spoke about earlier. Like, they need to differentiate themselves to prove, like, to the market, why are they delivering outcomes? Why should they be valued as the most important SaaS in the market? So they spoke a bit about that. Again, moving from prototype to production. And the large customers they are acquiring is mainly due to being on the front lines which is what Shyam said. He also reiterated that they're in a pole position. Generative AI made prototyping easy, but with the utility of a PowerPoint. I think that one was good. A good quote. And the bottleneck comes from not being on the front line. So as we spoke about on Palantir Weekly often, is that Palantir is actually on the front line with their customers. FDs are understanding problems at the point of contact. They're on the front lines, and you can't really get away from prototyping from your Gen AI apps if you're not on the front line and really understanding problems. I think about warp speed, just quickly. I've never used an ERP. I've used an ITSM and CRM in my day-to-day work. I don't know much about ERP. Maybe Matt or someone else technical can explain that, so I'm not even gonna try. And then quickly, I don't think they answered Dan I's question. Like, it was like simple question. Does it feel like you're starting to accelerate? And you're like, well, numbers speak for themselves. Like, okay.
Well, I think the answer to that is yes. I think Dan wanted a specific conversion rate, and I don't think they're going to give that. And I don't blame them for giving that yet. I mean, that's a very specific number.
No, they could have spoken in a broader sense, like where they have been and where they're going. But yeah, I don't know. And then about Mariana and warp speed, OS for the modern American manufacturer. Again, someone more technical can maybe speak to that. And then I think the second question was kind of good. I didn't, maybe you guys can tell me what the answer was, but what is the biggest barrier / hurdle for US primes, like the legacy one? Why can't they just come to Palantir to help them re-industrialize and capture like so many more billions of market? And I didn't understand the answer. Maybe it's getting too late for me, but did you guys understand what the answer was to Mariana's second question?
Yeah, we'll go around the room and we'll get some more.
And then before I go, just one last slide I want to show you that I compiled. That Tyler actually told me it wasn't in the slides or in the 8K, but for the first time in Palantir's history since DPO, or since they started reporting on this, average revenue per client actually went up. It's been steadily declining every quarter since they started reporting on it, but it actually went up from 2.29 million per client to 2.34 for this quarter. So first time it re-accelerates, and this excludes the top 20 customers. So that's cool. Anyway, sorry guys, I couldn't really get into the deeper talk. I really have to go. So thank you so much for having me. Thank you everyone for listening, and I'll catch up on what you guys are saying tomorrow. Bye-bye.
All right. Amir's Twitter is in the description. You guys can check him out as well. Thank you, Amir, for joining. See you. All right. Arnie, your raw thoughts on, actually, I know, Arnie, you have a lot to say. Let me go to Vince first, because I know he'll be quicker than you, and then we'll go to Arnie. Vince, your thoughts.
Well, I also think, like Amir, that they didn't answer the question of Dan Ives, and it was one of the most important questions, because if we don't accelerate further meaningfully from here, then we are fairly priced at this point. So I thought that was a very, very good question from Dan Ives. And they could have said, this is just the beginning. You're going, like, we have tons of ways how to further accelerate AIP, or, but they didn't give an answer on that. I wonder why. Then did I miss something? Do they have like a partnership with SpaceX or something? Because they kept referring to Tesla, but mostly SpaceX.
Yeah, I think the reference to SpaceX was about the architecture of American manufacturing that they're trying to bring. We'll talk more about that new warp speed product. I don't know if they have a partnership with SpaceX, but it is exciting in terms of them referencing how they're going to help the next SpaceX in America.
Yeah. Then two other important things for me. They did mention that expenses are going to go up, but they're going to go up less than the revenue. So that's further margin expansion, but they are going to invest into the business and debugging bottlenecks. And I think that's very positive. And this warp speed that countries are speaking to them about how to implement production, I think it's an interesting possible re-acceleration or more acceleration of governments, because if you follow the Ukraine war, somehow Russia has been able to way outproduce the US and the Western countries when it comes to tanks, weapons, rockets. And it's kind of a problem because I don't know how the US was thinking. Like, if a war breaks out, we're just going to buy the weapons from China because they can produce. That was probably the logic at one point. So I think that that's like a pressing concern for a lot of countries, and it can be a very nice revenue increase for the company. These were my points.
Neil, your thoughts on this quarter?
Yeah, so a bit like last earnings call. The Dan Ice question, not really a real answer. Not surprised. Like you said, I think it's still early on to give us some percentage. But overall, I mean, still the same. They are firing on all cylinders, doing what they have to do, growing revenue, margin expansion. Like you said, the SpaceX stuff, I think it's because SpaceX has come into the industry that NASA has been in for quite a long time. We haven't been to the moon for, well, God knows how long. And they are doing things better because, well, they started from the base, and then they built on top of that, which is technically what Palantir is helping other companies to do, operate better thanks to technology. But we'll talk about that maybe a bit later.
Yeah, Neil, I got to hold on real quick. Matt, Arnie, I know you guys have a lot to say. I know we all have a lot of thoughts, but someone just joined backstage, and I got to give them the next 10 minutes because we haven't heard from this guy in a long time, and it's time to hear his thoughts on a fucking amazing quarter. Codestrap, hello,
What
sir.
up?
What's up, my guy?
How's it going?
Gandalf, the man.
Yeah, man. I'm just getting
Great to
over
see
being
you.
sick. So yeah, great fucking quarter, amazing. I would say there's a big difference between 27% and 30%, and that's like where we got to get. I think to really accelerate things, but also I'd say like the results kind of mirror what I'm seeing in the market and at work and stuff. So they're definitely getting a lot more traction, and a lot of people are starting to pay attention. There's a huge interest in AIP. Like, AIP is driving a lot of the adoption that I'm seeing, and I think that's going to continue to accelerate. And what's interesting is how Palantir is going to find a play in this landscape where you've got like other data infrastructure tools that have been adopted. You've got things like that are built on GCP. You've got things that have been built on AWS. A lot of companies built that infrastructure like 5 or 6 years ago. And AIP is like coming in at this perfect moment where like they want to be able to use that data within their application framework and capabilities, but Palantir's got to add a few things to really make that like a seamless experience. So it's not just everything sits in their data processing layer and ontology. But when they do that, this thing is going to freaking explode, because there's really no other way to operationalize LLMs in a way that like is going to deliver the business value. And you hear Alex talk about that constantly in this call, like how they're the only company really being able to deliver the goods. And I think people are really recognizing that. And it's just a matter, there's just these little things that are being done behind the scenes that are going to make that developer experience easier, are going to make that whole process of like bolting AIP on top of existing infrastructure. And when it does, like, this whole thing is going to accelerate so fast, it's going to make your head spin. But I think the indicator will be when you see that number of that growth rate in US commercial hit above 30%. I think that's like the leading indicator of when all of this is really gonna rocket off. But yeah, amazing quarter, and I probably couldn't be happier unless we had hit that 30% number. But yeah, and I do think that from what I'm seeing with US commercial customers today, the goal is their goal is to leverage that application layer, everything north of the ontology, everything like in AIP, not necessarily in rebuilding their data infrastructure, but in like how can they use these tools to do just so much more to revamp their business. I'm interested to see what warp speed is too. Did anyone like hear an actual answer in there? Like,
I think so. So, Code, do you remember when they gave that AIP demonstration about manufacturing and being able to find parts if, say, something wasn't appropriately like ordered appropriately? You remember that? I think that's about what it is, and I think it's about like assembly lines and factories and being able to put things in inventory and sourcing inventory as quickly as possible. I don't know. That's just my speculation.
They have this other thing called unified namespace, which is like their manufacturing product, and I've been working with that team a lot, and it's freaking amazing. Like, what's cool about it is they can serve this surface logic that's in your PLCs, which are like the thing that monitors all this equipment, right? And it's programmed a certain way. They can surface all that, how those PLCs are programmed into the ontology. And the ontology in there, you can use AIP to make recommendations on what to do when you're getting alert signals about different parts of your equipment. And it can take into account like how those things are programmed. And then it can also go straight off like the open standards for the message queues and the metadata aggregators for manufacturing, and like aggregate that at the edge and like push it out into the ontology. Like, it's a full end-to-end solution. That's been out for a little while. I mean, it kind of just came out, but it's been out for a little while. So I'm interested to see what Warp Speed actually is, because unless they rebranded the unified namespace thing as like now Warp Speed, I don't know. But I have thought for a while like Palantir is perfectly positioned to displace ERP, because like ERP is such a freaking dumpster fire. Like, no, everyone's always trying to work around it. They're always trying to like figure out a way to like get basically unlock the value of the data that's in there. Right. So like Warp Speed might be something that is different than some of these other offerings, but I'm interested to see what it is. And ERP is a space that's just going to be like, it's a source of constant friction in a lot of these companies. And if you can build something north of ERP that like also integrates with all that rich history, how that rich business logic that's trapped in the ERP system, but you build something north of it that everyone just uses on a daily basis, you're de facto the new ERP system. Right, you're running your business. And I think that when Sean is talking about like and Alex about the Palantir alum and the SpaceX people like being the only people who know how to do this in that sort of next iteration, that's what he means, is like there's this other way of running your business. And if you were to build your business today from scratch, why would you pick an ERP system that was designed 30 years ago, right, to be like the backbone? And by the way, why do I have to mold my business to this shitty piece of software? Why doesn't the software mold to my business, right? Do you know how many billion-dollar decisions are made that just cost companies ridiculous amounts of money because they're like, oh, well, we obviously have to, mold our business to the way the software was built. Why do you have to do that? Like and it shouldn't cost you $100 million to mold the software to the business, right? So I think like Palantir has been really effective at displacing ERP and like moving around it, building something new that is way more valuable. And I think that's what he's talking about there. Like when he talks about like the alumni, if you guys don't know what the Palantir alum is, there's a whole like investment community that was created. There's a VC fund for Palantir alum. But yeah, so there's this huge network of ex-Palantir. Check it out if you haven't. But that's that like Palantir mafia that has started all those really successful startups. But yeah.
So, CodeStrap, I know you have a few minutes. For those that don't know CodeStrap, he is a consultant that helps companies implement Palantir, and he's been following their journey for a very long time. CodeStrap, I want to ask you this last question before you had to head out. 2 years ago, you were on this stream. All of us were on the stream complaining about Palantir and how they were not getting the right things done, go to market, explaining developer community, all that stuff. 2 years later, I know it's not 30% growth yet, but do you think they fundamentally changed?
Oh yeah, for sure. I'd say like three things, like community.palantir.com, the build.palantir.com, and one other that they recently released. But like those all like opened up to learn.palantir.com, right? Those are like all of the building blocks that you need to make sure that the best Palantir software engineers are not inside the four walls of Palantir. And that is critical for growth. If you don't fucking do that, you are never going to grow as a software company, right? And so those three things alone, it's transformed the ability for people to learn this platform and adopt it. And I think that like if you really look a year out to 2 years out from now, I think what you're going to see is like a huge growth rate in the number of like startups, but also the number of active community projects, open source tooling around Foundry. That's all going to start to grow exponentially. And what that does, just so you guys know, like when you sit inside like in an IT organization inside a large Fortune 500 company, and say you're a consultant, you come in and you're talking about Foundry and you're trying to convince them that it's the future and it's the right platform. If on the other side of the table, you also have an advocate who's like, oh yeah, I love Foundry. I've been building with it in my spare time over here. I've done these pilots with it internally. It's like the conversation immediately shifts from an adversarial one that's like confrontational to one that's like, oh yeah, okay, so how do we accelerate this adoption? And like that is, I don't know if you guys have seen some of the studies around like how many developer advocates have shaped, like they go, like a lot of software engineers go around to all these different conferences that AWS puts on, Azure puts on, whatever, and they actually incentivize these engineers to buy their services, use their services, and they become internal advocates at the companies that they work for. And that's how like software has traditionally been spreading. So with Palantir, you know, if you think about how successful they've been with doing none of that, they've done 0 plays from the software, you know, SaaS playbook, right? Now they're running 3. They've got 3 plays in. Like if you think a few years out, like they haven't even begun to tap the enterprise growth that they're going to see once.
Do you think this is just the beginning? Do you think this is really just the beginning?
Yeah, 100%. 100%.
We've only just begun.
Dude, what you're going to see is this thing become an application platform. Like it's really moving from what I see dealing with, like I work with their developer experience team. I work with a lot of the people at Palantir and shaping some of these offerings that are coming. What you're seeing is they're transitioning from a data processing layer like into an application layer. And that's what, and AIP is spurring all of that, right? Like AIP is really spurring this transition, and enterprise customers want to go there, you know? So I think this is just early days. And when the leading indicator of when things have really, I think, hit the accelerator will be when it's 30% or more on the growth. Cool.
Love it. Code, thank you for joining. It means so much to you. We really appreciate it.
It means a lot to see you guys, man. I haven't been on here in a while, so we got to hook up and do a proper Palantir weekly one of these days.
Absolutely. Thank you, Code.
All right.
Talk to you
Cheers.
later.
Bye.
All right, Neil. Go ahead. You can continue.
I don't even know. I think it was at SpaceX stuff. But yeah, no, overall good quarter. Again, if we had more analysts on the call, I think we would get way more information. It's a shame, but yeah, I mean, so far so good. If we can get more information on that warp speed stuff, that would be great.
Okay, Arnaldo, your thoughts on this earnings?
So many thoughts. I'm happy to see literally the development of a company that we had the intuition could have been much more than we initially saw from the DPO, from where it was at the bottom. We saw the potential, and now we see the emergence of the strength. As a reminder, I like to say, now we are just seeing some earnings, but it's not truly earnings that matter. It's more building the earnings power of the company, because if you have the power, the strength, then earnings can follow. And Palantir is keep building power. So we have seen this both on the commercial side, on the government side. It's great to see the government side alive, is not dead, is not too mature to keep growing, is just a beast on its own. And I would argue that with the recent geopolitical events, the relative power Palantir has increases by the day. And this is very, very connected also to the commercial side, which is also includes the defense contractors, which fail to properly supply equipment to properly be fast to tackle the challenges of this new decade. So the reason why Karp was mentioning again Palantir alumni, SpaceX guys, intrinsically he was referring also to Anduril, is because they understood that in order to produce real stuff, to bend metal, as Sham says, you need to be pro in software. And the way you can keep up with competition coming from the other part of the world is to become software defined. Now, this translates very gradually into the numbers, and it's great to see, for instance, I didn't fully realize that on the commercial side, we're growing already 30% once we exclude the negative impact from SPACs. At the beginning, I think they dropped finally one of the most peculiar, nice hint regarding, I think it was an hospital, saying we contracted this client for the first year. It was a $1 million contract or $1 million revenue. Second year, $4 million. Boom, 3x. Third year, $15 million revenue. another almost 4x. So if this is the the potential client path, and we consider that, as Eimer showed previously, that the average revenue per client is around $2 million per year, imagine what happens to the existing customers as of today as they keep expanding through their journey. Maybe they will not all go 2x, 3x, 4x every year. That would be cool. But at least that gives a sense of the power. Again, that is all earnings power that could emerge over time. Now, we have this hint of the new offering, Warp Speed, which seems essentially the operating system to make manufacturing work fast again. So essentially all the tools that all manufacturing companies need to have in order to be efficient into their work. So it reminds me a bit of the government equivalent of Mission Manager, which is something they mentioned in the last earnings calls, but now they're not really mentioning it, which is essentially all the toolkits to make startups work with a government. So by providing little different pieces of the Palantir offering, that one was tailored for Palantir Apollo Fed Start. Then you have Ontology SDK, and then you had also, well, the third piece. Now I don't remember it. Here we have potentially all the products that every potential industrial company needs to have. So think the ERP, the CRM, all these very heavy SaaS companies. Typically, the ones that already belong to the SaaS leaders. So Salesforce, ServiceNow, SAP. This put Palantir potentially in direct competition with them. And since we know that Palantir's offering is way superior, it will be very interesting to see how the dynamic emerges. I would say good job to Glazer, the CFO, for the first time explaining better that seeing the net dollar retention still relatively low is partly due to how the net dollar retention is actually calculated, which essentially underscores, underrates the real effect of the growth, because it fails to really, the net dollar retention is based on the expansion of the customers that you had last year up to today. So that doesn't capture all the customers that have been acquired recently, which are the ones that are very expanding a lot. And as we mentioned previously, this 27% growth is like a 14% due from expansion of existing customers and a staggering 13% from new customers. That's probably the highest level achieved from new customers.
Maddie Capital, your thoughts on Palantir earnings Q2?
I thought it was well received. I'm glad to see that I wasn't just like making things up and missing numbers in my head. So it's nice to see that I did some background research looking at the actual news release, and $26.6 million was spent on buybacks for 1.2 million shares, as they alluded to in the call. It's an average about $22.50 per share. I think it's nice. If you compare that to the adjusted operating income that they observed, it's about 10% of the adjusted operating income. That's about a number I'd be okay with on a pretty consistent basis without spending too much money from a buyback perspective. I think that's prudent, and that means about offsetting about $100 million a year in share compensation, which we know at the moment we're running anywhere between 125 to 150 million. So if you're able to offset about a quarter of that, it'll really help. And eventually, as we continue to grow revenue, it'll completely offset, and eventually we'll actually start decreasing share count in, say, 2 to 3 years. So I think that would be kind of the goal of that. It's a lot of what Google does and a few other companies out there. But I think the thing that makes me most excited is that NDR is starting to trickle back up to 114. It's not barn burner, right? But it's not 120, it's not 130. But at the end of the day, it's solid double digits. And if you think about the rule 72, I mean, if you were to just continue at a 14% and keep that, every client will then basically double revenue every 5 years. And so that's nice to see, coupling that with 80% US commercial customer growth. So you think about getting 80% new customers year over year, and then being able to increase their NDR by 115% annually. That's pretty badass. And then the last thing, which was it, crap. The 27% year over year growth was nice, but Amir kept stating it. It was a weak quarter in the second quarter of last year, but even still, 27%, I'll take it. Even maybe a slightly stronger quarter would have been 24, 25%. So I'll take that. There's one other thing I was really trying to remember that I was really excited about.
Was it a specific metric?
Yeah, there was something in particular. It'll come to me, but I hit on the main ones, man, and I'm just appreciative that I may not have ever heard of Palantir had they not hit me on the face 5-6 years ago and had the opportunity to work with them. And I'm glad that I've had the opportunity to see it firsthand and see their vision, and it's really coming to light. So congratulations. At the end of the day, we could say we're great investors and we know what we're doing and we can pat ourselves on the back, but at the end of the day, it's the great software that these forward deployment engineers, Karp, Peter, all those folks had envisioned 20 some years ago, back in 2003 when they founded the company. And I really think that people are starting to recognize and give Palantir the true value that it truly deserves. And so, is it overvalued? Of course, it's overvalued today, but I think the reason being is because there are a subset of investors out there that truly see where this can go. And as we've seen, they will continue to release products that are relevant for advancing the Western world and making it the best that it has yet to come.
I love it. I'll have a lot to say tomorrow when I make my video because there's so much to talk about. So there's no way I'm going to sum it up all right now. I guess I'll just say this. I think we have all invested in a company that is not bullshitting us when they say they are trying to take the whole market. Will they do it? That's a question of execution, and we'll see. CodeStrap wants 30%. You want different numbers in certain metrics, and I think over time that story will play out. But I think when you're investing in potential, right? You're investing in the hope that a company is not lying to you, that they are trying their hardest to execute against their guidance, and that your capital, i.e. your investment dollars, are helping play a role in order for them to do that. And I think at its core, Palantir was $6 a year and a half ago, December 2022, even around this time in 2022-ish, August, yeah, $7, $8. Since then, the company's become GAAP profitable. Since then, the company has taken on the behemoth that is artificial intelligence and the trillions of dollars that have yet to be unlocked for the enterprise. And they've totally changed their go-to-market with AIP boot camps and really accelerated prototyping to production when it comes to clients. So at its core, I think we've invested in a company that really is not lying about the fact that they think this is one of the greatest opportunities for enterprise software. They're going up against the big dogs, the SAP of the world, as Arnie mentioned. And I think they're coming to attack in an aggressive way. Final thing I'll say here is Karp's leadership, I still think, cannot be understated. This is a guy who has given up pretty much everything for this company. And he believes in the company to such an extent that he dedicated his life to it. And now it just must feel incredible for him from being in a dorm room to now, putting up almost $700 million in 90 days. I mean, that's just insanity. And I don't think someone who's worked that hard to get to this point is stopping here. I don't think they're letting the momentum die. And I think with that leadership from the top all the way down, every employee is going to be engaged, especially as they see the stock price go up, to continue working their ass off for Palantir. So very excited with the quarter. I'll have a lot more to say tomorrow on my recap video, but I think it was a hell of a quarter. I think investors should be proud of themselves. Now, look, the stock might do whatever. We got some news that Iran just attacked. We got some, the unemployment data might not be the best in the next couple of weeks, CPI, whatever it is. So we'll see what happens to the stock. But if you're long the company performed, and I think they did what they had to do.
Yeah, and I mean it's still early days, right? If you look at what the revenue that they're generating, it's still very, very small compared to what can happen in the future. So yeah, whether it's commercial or government, I think there's still a long, long way to go. Especially government, I think they're still very, 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 very small there.
All right. Any final thoughts by anyone?
I was thinking that we started the day at minus 15. We closed at around -2, and we are up afterwards.
It feels like Palantir helped the whole market, dude. Everything's up after hours. S&P is up 1%. QQQ is up. It kind of feels like maybe this earnings kind of helped, you know?
I mean,
Not
even
bad
if you try to do nothing, or even if, as I did, I was happy to buy the dip this morning, mentally, that's that's intense.
No, it's very intense, right? When the entire world is collapsing. I mean, the VIX looked like it was at 2008 levels, 2020 levels this morning. So for anyone who bought the dip, I mean, you really, you did it. And hopefully the stock action stays. We'll see what happens in the next coming weeks. But regardless, they put up a monster quarter. And that's important. It's very, very important. All right. I think that's it for us. Thank you. I think at one point we had like 6,000 people here. Appreciate it. Means the world. I think that proves that this community is very real, and this community is only going to grow and grow and grow. It's funny. Carp says it's the beginning of the progression for the company. It's the beginning of this progression for this community. I think one day we'll have tens of thousands of people caring about these earnings calls in due time as the company keeps executing. So as Matt said, Twitters and YouTubes for everyone are in the chat, in the description of this video. So please make sure to follow everyone there for Palantir and broader stock market coverage. And I'll be back tomorrow, 8:45 on the market open, and we'll keep talking about the markets and for Palantir. And shout out to Chad as well. We love the retail community. Thank you all, Chad, one of the main Palantir employees. Thank you, Chad, for being here as well. Go ahead, Vince.
I just wanted to say goodbye and congrats to Emir. Congrats to Arnie for buying the dip. And congrats to all the shareholders.
Yeah, I wish I got some. Congrats.
We bought the dip at 8.
Yeah, we bought the dip at 8. There we go. Yeah. Thank you, everybody. Appreciate it. We'll be back tomorrow morning. Have a good night.
Thank you. Bye-bye.
Bye, everyone.